Oh, good morning. Very quiet morning this morning, but we'll see. Afternoon, Rockhard. How you doing, buddy? Nothing happening at the minute. We're just waiting for the markets to actually do something. That's where we are right now. I've just started the stream on YouTube as well, so looks like we're all good. Hey, Dean Buston. So, bit of a slow-moving day today. Although it started off fairly slow yesterday as well, so you know it is what it is. It's but pre-market's been very slow this last couple of weeks, and then it's just boomed out of the blocks at the bell, so to speak. So that's hopefully we'll see a bit more action pre-market. I've got to be honest, I do like a good pre-market session. I need to update this scanner. 5 minutes. Yeah, some Marigold is the only one that's moving pre-market really, with any kind of volume at least. What's the relative volume on PSO? Pearson. Still, we'll look at the chart on Pearson. Okay. I love how people just try and go live, join live. You can't get the YouTube stream. Why not? It's live now. Try it again now. It's should be live. Hey Cornflake Reddit. When you guys, if you come in, just give the screen a couple of taps. It helps with the algorithm. Yeah, it's live now. I'm watching it live. I'm watching it live on. See, there you go. You can see YouTube live now. I'm watching it now. It's you can see it. Nothing working right now in terms of there's nothing moving. There's very little in terms of volume. But yeah, the YouTube's what's the portfolio balance? Well, Kuzi, we finished yesterday $9,000 in the green. I took one more trade after the stream ended, but I recorded it and uploaded it to YouTube, so you can actually watch that trade taking place. It was recorded live. But we start today with 73,600. Oh, for the sake of $6, 73,700. That's the equity on today. So we've got a buying power of over $440,000. So just waiting for some stocks. Rasper, I keep telling you, don't trade out of boredom. That sometimes the best trade you can take is the one that you don't make. You know, it's I say that myself. I mean, I'm just as guilty. I take boredom trades all the time. I feel like I'm sat here watching the markets, and I feel like I should be trading because the market's open. And very often you just wait for the setups, because very often it's just not worth taking the risk with you know, chasing action or you know, boredom trades as it were. Yeah, well, that's it. So you've got Friday. Don't go revenge trading today. That's the thing. That's the worst thing you can do. And I've got to be honest, the majority of people are guilty of that. They have a red day. The following day, they end up with a second red day because they go revenge trading, trying to recover the previous day's losses. And I had a red day this week on Wednesday. And yesterday, I just traded regularly. I watched the setups, I played the setups, and I recovered the entire red day and a bit besides, just by, you know, trading the setups, looking for the setups. And it was still choppy yesterday. It was still difficult to trade, but, you know, there's always at least one stock that's moving. So yesterday, the main stock moving was Agri, and we managed to get a good trade on that one. Good stuff. I've got invested in a microphone as well. So I went out. I got my hair cut, so I'm looking all fly and dapper. Even shaved the whiskers, so you know, ready for the weekend. And whilst I was out, I invested in a new microphone, so hopefully it won't cut out like the other one. The compressor on the other one was just completely knackered, apparently. So, you know. Yeah, so poker's the worst, especially if you go on tilt. It's terrible. You know, revenge trading is like going on tilt. You make a couple of bad moves, and then you make more bad moves trying to recover from the first bad moves, and you end up spiraling down. So just don't do that. If you need to, just take a long weekend away from the markets. Just don't trade today. Cool off and come back at it on Monday. You know. Cheers, Michael. Appreciate that. Now, if the camera was behind me, you wouldn't be seeing that. So I don't trade the UK markets. For me, I know some people like to trade the UK markets. It's okay for swing. If you're a swing trader, then it's okay. But for you know, pattern-based trading, you know, intraday trading, I think there's just not enough volume in the UK markets, the European markets as a whole. There's just not enough volume outside of the US. If I look at the US market right now, for example, pre-market, this is the kind of volume that you get during market days, not even in the UK market. So you don't. What was the late trade that I took after the stream? Good profit? Yeah, absolutely, it was a good profit. So the late trade I took after the stream was Agri. Now we were down a little over $1,000 when I actually took when I finished the stream on Agri. We had the cushion though, so we were 2,000. We had like $2,000 in total in the green when I closed the stream yesterday. Then I went away. I took the dog for a quick walk, let her out and do her business, and then came back in. And it was just setting up for breaking high of day. So I sat down and I jumped in with big size at high of day, and it broke out. And then I was able to take some quick profits, but keep a decent position and ride it up. And we ended up over $6,000 in profit on Agri. So that took our profits but it extinguished the loss that we had. So we ended up, that trade was about 7,000 in total, a little over 7,000. So it extinguished the loss on agri that we had towards the end of the stream, and it recovered, effectively recovered the drawdown from the day before. So right now, the only thing that's got any decent volume and gapping up is Marigold. So Marigold, it's not a strong catalyst, you know, if at all. It's not got any real news on Marigold at all. So the Marigold companies, just that's gapping up at the moment 114%. So that's currently trading at 460s. So it's below the volume weighted average price. So for me, I need to see it take the volume weighted average price for that to be interested in that again. I can now trade. It's after 12:30. It's after 7:30 market time. So I'm back in the ability to trade. The shop front is open, so to speak. Pearson Group, I'm not too vested in Pearson. The volume's not great. The relative volume's not great at the minute. Alto Ingredients, those are the three biggest gappers above $3. So Alto Ingredients just received a rating update from the analysts. That's really the only reasons after the earnings call yesterday. So Alto Ingredients Q4 earnings call yesterday, and it's received an upgrade from the analysts as a result of that. But that's currently up 16%, but it's very low volume. It's at 83,000 shares traded. So, you know, even if we look at, I mean, say it's low volume. I mean, it's not even a tenth of what it's not even a fifth, or a 20th of what it normally trades at the moment. So right now, we've got a lot of ETFs and derivatives in the gappers list. I won't be trading any of those. Marigold is really the only one that's taking my eye, but that's trading below the volume weighted average price. So I'm just going to wait for a setup. There's nothing on the watch list as such right now. The SPY's up, the Nasdaq's up, the markets are all up on the day. The VIX is down. So again, very rangy over this week. One day it's up, the next day it's down. So the market's very choppy at the minute and sideways moving. So yeah, it's just okay to watch this space. I don't have very high speed Wi-Fi. I have a fiber connection, and I've got 5G Wi-Fi from my router. So I do have a really good router. I've got an ASUS router, which is what I get my Wi-Fi on, and I'm on a 5G connection there. So and that's connected via fiber. So it's a decent speed, you know, up and down. I don't get much latency on it. Very, very low latency, which is the main thing. Weekly average you'd expect to make, or is that too personal? Well, I'm trying. My goal is that I'm aiming for $5,000 a day on average. And that way, because my goal is to make 7 figures this year. And to do that, I want to be averaging between $4,000 and $5,000 a day. So in order to that would make it 25,000 a week in dollars, US dollars. So you break that down, it's about 18,000 sterling, about 22,000 euros. And I'm saying that like I'm being blasé about it, and I know that's a hell of a lot of money. I do know that. I'm not being blasé about it. Guys, we've got 200 likes in the TikTok stream, so we've got over 200 people. That's 1 like per person. So Guys, just give the screen 10 or 12 taps each. Just help with the algorithm. Do me a favor, guys. I don't trade Forex, so I don't comment on Forex. Quite frankly, when I tried trading Forex, I lost money. I joined the majority and lost money. Over 95% of people who trade Forex pairs lose money. So I don't do it. What cryptos or stocks do I have? Well, I have, I'm holding Bitcoin, Ethereum, XRP, and also Cardano. So those are the four that I'm holding long term. I'll dip in and out of the market. Hello, Black Eagle. I'll dip in and out of the market with other instruments as I see fit. You've sent 170 likes. Okay, well that's good. You've covered for the couple of people that have only sent one. So 170 likes is fine. But yeah, I've invested in a little microphone for the YouTube stream primarily because that was having problems. So the YouTube stream should be good to go now. And I've just been involved in a Twitter spat with some of the ape community about AMC. AMC is currently trading at 15.79, and BAM Investments got this algorithm-based, thing that he goes on there, and he's been reporting about AMC going to the moon for over a year now. And his predictions, not a single one of them has actually come true. So I just jumped on there and he started talking about my predictions for the bear market was seen 6 months ago and this, that, and a potential crash. So I jumped on one of his tweets, just responded to one of his tweets. I'm like, well, if your predictions on the bear market are anything like your predictions for AMC, then I think we should take them all with a pinch of salt. We can all look forward to higher highs then. And then the ape community came after me. So I love Twitter for that. There's nothing more toxic than a Twitter spat. It's beautiful. But the thing is with Twitter, you don't even have to go after somebody. You just have to say the right things and they come to you. It's hilarious. But, Twitter's fun. Twitter is fun. But, no, the market's a bit slow at the moment. I've got Marigold, Pearson, Alto Ingredients. Those are the only ones above 15% in terms of the gap. Future Holdings. Yeah. And it's so that's then we've got Derivative Direction Daily, Microsect, FinTech shares, Pro shares. It's all just hedge funds and things like that. There's not a lot of movement pre-market at the moment. Just wait for a few people to come in the chat, and then I'll give you the tour around the desktop, and you can see what's going on. And we're just waiting for some action. When you say the symbols. I don't understand what you're saying there, Michael. I think you missed a couple of words. In your eagerness to actually put a comment in the stream, I think you missed a couple of words out. I started the month just under 29,000. Because I withdrew 50,000. Am I shorting today? I might do. We'll see. It depends if there's anything worth shorting or not. Have any dividend stocks that I like? Well, I've got a few. I've got AMD. I've got shares in Microsoft, Dell, EMC. I've got shares in. I've got shares in Disney that I'm holding. I've got shares in probably about 8 or 9 different Fortune 500 companies, the large cap stocks that I'm holding long term, and I don't mind with those because you do get dividends from them, but I'm holding those long term because if I keep dollar cost averaging, I'll have enough position and it'll just give me a nice income when I decide right enough's enough, and I can just earn for sitting on the beach drinking pina coladas, That's the ultimate. That's the ultimate aim. So I want to. I've set myself the goal. 7 more years of trading. Well, 6 more years of trading after this. 6.5 years of trading after this, and then I'm retired. 55, and I'm gone. I can just take my big wedge. I won't be holding in the bank. It will be invested, and I'll be getting dividends and returns on it. But I'll take my big wedge, and I'll just be somewhere nice and sunny by the pool or by the beach, sipping pina coladas and enjoying enjoying it. If you're in Amazon and you get a split, it's nothing to worry about. The reason it's nothing to worry about. Really, pina coladas are fattening like it's going to make any difference? I mean, come on. You might have rock hard abs. I've got rock hard abs. They're just coated in this layer of fat. That's the thing. So my abs are just as rock hard as yours. They've just got padding. The thing is with rock hard abs, the difference between me and you, rock hard, and why women find me attractive in terms of the dad bod, is because it's like sitting on a park bench versus sitting on a sofa. Even a sofa has the hard springs underneath, but you've got the upholstery. I'm well upholstered. That's the difference. So a few pina coladas to add to the upholstery doesn't matter. I'm not trading anything at the moment, Ethan. The problem is that the market's quiet at the moment. It's not open yet. It's pre-market. Absolutely. That fat is my upholstery, like I say. Just it adds to the comfort. I'm a cushion. That's why whoever's laying with me, it's like laying with. I'm built for comfort, not speed. Let's just say that much. But I'm not trading at the moment, Ethan. I've built my watch list. On the watch list, there's maybe one ticker that's moving. We'll have a look at PSO again. No, PSO, there's just no volume on PSO. Marigold is the only one there's no volume on Alto Ingredients, which is the other one that's up a reasonable amount. Marigold's up 104% on the day, but it's currently trading. It's right now. It's trading at 441, but it's below the volume weighted average price. So there's no trade in it for me yet. I want to see it back above $5, ideally above $5.50, and then we can look at it. I mean, the highs here pre-market are $7.50, so we've got a little bit of a support resistance level around $6. But right now it's looking like marigolds. I would say the levels are the half and whole dollars to watch. We've been down towards $4. It bounced at 4, came back up. We're now trading at 430s, 420s. So there's nothing moving. I mean, even IMPP, which was moving quite well yesterday, is just barcoding, and we need volume. We need volume. What is it? Pre-market? You're looking at the US doesn't open until I'm just looking at pre-market. I can trade from 2 hours before market opens. That's why I start the stream 2 hours before market opens. We can start looking at various areas of the market. If someone in the chat has something they want me to look at. ICT is the man whoever is trying to learn, he's got free monitorship on YouTube. Well, if you could actually spell mentorship, people might actually listen to you. But if you're going to come in and trying to promote other people's stuff, I'm going to boot you. Sorry. That's very rude. This is my stream. Don't come in trying to promote someone else's. Bishal, yes, I can teach you my strategies. So if you want, I'll just pull up my little link tree here. Okay, so whilst you're asking, I'll just pull this across so that everybody can see. So where are we? I'll flip around. Okay, so if you go into my profile, and I'll go into TikTok. If you go into my profile, there's this little link here, and you can go click on the link, and if you get that, just open it anyway. The top link there is the course. This is my course. I partnered with Teachable. This is the web address. You can screenshot that if you want. This is the web address. But I partnered with Teachable, and you can just go in there, and this is what you get. You know, it's basically it's a 12-module course. It starts off with the introduction to trading. This lesson is up for free on YouTube. You can go and watch it. Then we've got risk management, stock selection, chart, setting up charts, understanding the charts. Then we look at intraday chart patterns. We start looking at intraday trading strategies. This is probably the once you understand the first pieces, this is the most important piece, because, well, actually the risk management is the most important, but then we get into the actual strategies themselves, what I'm doing, what I'm looking for, what I'm trading. Then we look at where to find the stocks. How do I select a stocks to trade on an intraday basis? Then we get into the trade management, the psychological piece, how to not lose your cool when you're in a red zone, all this kind of stuff. Then a bit more technical, we're getting involved in level 2 and hotkeys. And then if you're going to do this full time, you know, you want to treat it like a business. So business planning, trade planning, and how that works, and actually putting a plan in place over a time frame for you to become profitable. And then we get advanced technical indicators, and I've even got a little section, introductory section on options trading. So you want to do that. That's going to cost you $150 a month. You can go through the entire course in a single month. That's not a problem. But if you want to stick around, you'll get one-to-one mentorship as part of that, with me directly as part of that. So that's if you go into my link tree, that's the first one. Okay. What I'm going to do here is, this is Benzinga. The third one down on the link tree is Benzinga, and I'm looking at Benzinga now. So this is what I use to scan for stocks every single day. So the one that I'm showing now is the actual gap scanner, and what I'm looking for is stocks that are moving up, that have gapped up at least 15%, 14 or 15% on the previous day's closing price. But also they need to be trading on relative high volume. So right now, that's not, Marigold is the only one that's relative high volume. The rest are not. It's very low volume. Then I've got the next scanner I've got set up is the momentum scanner. It's based on the same principles, but over the last 15 minutes. So it doesn't have to be stocks that are gapping up. I'm just looking for stocks that are moving up with momentum over the last 15 minutes. So I can look at what the volume is. I can look at how much they've moved and what the price is, etc. Then I've got the surging stock. So this is, again, the same thing over 5 minutes, and this is the same thing but sorted by volume. So this is a ProShares. It's based on, this mirrors the NASDAQ. So this one is another ETF based on the semiconductor industry. So these right now are the top traded stocks, and they're derivatives. Down here we have the signals. So right now I've just got this set to price spiked pre-market. Halt and resumes doesn't affect the pre-market because there are no halt and resumes pre-market. Okay, so that's the thing. And when we've got, if we're looking for reversals towards the end of the day, I'll switch on the high and low scanner. So I can click that, and it tells me whether I'm looking at the high of day, or whether I'm looking at the 52-week high, or I'm looking at the session high, or whatever it is. And then I've got the news, rolling news here. So I've got rolling news, and this impacts, this is probably as deep as I get with the fundamentals. I'm looking for a catalyst, okay? So when I look at Marigold, I click on the ticker with Marigold, and the ticker with Marigold, just pull it up here, and we can see that Marigold, I can pull up the data here. I can look at the key data for if I want to know what the short percentage is, if I want to know what the float size is, etc. I look at what's the catalyst that it's, you know, gapping up for. So last night we had new product offerings with Marigold, so that's why it's gapping up this today. So there's not a lot to work on. So that's, you can actually get that now. Of course, I've got, this is my watch list in time frame, in graphical format, in chart format. So this is my watch list. I've got 8 tickers here. I've actually got the markets. I've got the SPY, the triple Q, and the VIX, which tells me what the market's doing. But these are just would be my watch list, but I've not got a watch list right now. Here's where the action takes place. So this is the 1 minute, 5 minute, 60 minute, and daily time frames, and I've only got the 60 minute in there for symmetry's sake, really. But those are the 4 time frames that I'm working on when I'm trading. And then over here, I've got my montage and my hot buttons and profit and loss. There is no profit and loss because I've not taken any trades. And over there is just my day-to-day monitor that I've got other things. Currently, that's the YouTube stream. So this is my face. And we'll go back. So yes, I can teach you the strategies. You can learn from the streams every day. I hope you can learn from the streams every day, but I put it down. I had a lot of people, when I started streaming, I had a lot of people asking me, can I teach them? And that's why I put the course together and put it on Teachable. It's probably about 18 to 20 hours of lecture material there, so you can probably get through that in a fortnight if you did one module a day for a fortnight. You get through that. Yes, it does. Mr. Agri, did I? No, Agri's low volume and it's trading down on the day, so I don't know what that means. What's the ticker for Marigold? MGLD. It's trading underneath the VWAP at the moment, so I'm not overly confident with it. So the energy stocks aren't. The energy stocks are not moving at the moment. HYMC isn't on my list, but let me just pull it up on the chart and have a look for you. I've got. I actually decided to install. I hadn't been using it. I'd used the web version, but I've decided to install TradingView app. So I'm just going to. What's the one you wanted? To HYMC. HYMC sounds like a song. Okay, so it's not on my scanners because I don't. I've got my filters set to filter out anything before. To filter out anything below $3. So this is trading at 160. It's having a good day at the moment. If I'm looking at the 1 hour time frame, I'll just bring it back to the 5 minutes so I can look at. Yeah, so it gapped up pre-market, went up to almost $2, so $1.95. It's now $1.59. It closed yesterday. Yesterday's close was $1.46. So what worries me about that is that, oh no, it closed. I'm looking at the wrong session here. No, I'm right. That's the difference between post-market and pre-market. So it went up post-market to 190, 195, 196. It closed yesterday at 146. It's now 162. So the fact that it's gone up to almost $2 and it's retraced more than 50% of its gains from yesterday doesn't fill me with a lot of confidence on that one for today. If we're getting a lot of volume, it could be interesting, but there isn't a lot of volume. Looking at 5,000 shares, over, you know, so 1,000 shares a minute. It's not huge volume at all. So it's not setting up for a trade for me at the moment. ICT is a blagger that regurgitates archaic strategies his own. That's all I do. That's all I do. I don't know about the blagger bit, but the strategies that I've got that I use are not my own strategies. They're well-known strategies. They're strategy, and that's why they work. So I've not invented a magical formula on how to be profitable in the markets. The strategies that I use are well-known strategies. They're tried and tested, and they are the same strategies other profitable traders are using. Market microstructure? No, I don't. I have because of the wider market influence is not something that I take into account on an intraday basis. I keep abreast of the markets. So if they're ranging sideways, it makes for choppy market conditions, choppy trading conditions. If they're moving up or moving down at any great length, that's good for us because that creates volatility in the markets, and that's what we're looking for. So I do cover that off in the course. So it's hustle-with-tony.teachable.com. It's in my link tree. Just swipe, go to my profile and click on the link tree. It's the first one on the list. So there you go. So you get 90 minutes. If you subscribe to that, you get 90 minutes. A 90-minute session with me. If you subscribe into a longer term, you get more. It's that simple. So just have a look at the things that you get. And 90 minutes for that price is good. I mean, I charge consultancies a lot more than $150 for 90 minutes. I'm charging $400 an hour for my consultancy normally. So you're getting me a lot cheaper than what the corporate world's getting me for. NASDAQ 100, German, the DAX 30, the US 30. Yes, I can teach you, Lock Monster. Like I said, can you make money on this still? Yeah, of course. I'm making money most days. I didn't make money Wednesday. I lost money Wednesday, but that happens. You get red days. Marigold, I believe Marigold's cannabis stock. I thought, but double check. I'm using Daytrading. Just check out the link tree. I mean, if I go to the link tree, back to the link tree. So that's not the link tree. It's so I'm going back to the. Why is that not popping up? So I'm going back to the link tree here. So on the link tree, we've got the top link on my link tree is that course. Everybody's been asking me to teach them to help them learn how to trade in the markets. That's exactly what that course does. It goes over technical analysis and charting. It goes over the strategies. It goes over the mindset and psychological elements. It's everything you need to get started. I can't promise that you'll be profitable. I can't guarantee any level of profitability once you've completed the course. That's down to you. You have to be disciplined enough and strict with your trading plan in order to execute the strategies to effect. The strategies are profitable. I prove that every single day. It's up to you to be profitable by doing that, okay? So the third one down is Benzinga. The third link down is Benzinga. And that's where my scanners come into it. And if we keep going down, you've got the Dash Trader there. You've got a link for interactive brokers who I recommend. You've got a link for TradingView, which I use for charting. So all of the tools I use are in my link tree. Everybody asks me what the platforms are. It's all contained in the link tree, okay? Now, YouTube. Oh, hey, Jack Sparrow in YouTube. New mic sounding great. Well, I hope so. It's cost me a pretty little fortune, but Okay, so you lost in Agri yesterday, Jack Sparrow. Oh, sorry. So sorry to hear that. Did you did you actually trade the strategy, trade the patterns? Because I traded Agri after my initial, when it faked me out at I think it was 450 or whatever it was, 450. When it faked me out and pulled back, and I lost money on that one, it went back up and retested those highs and broke out. And the patterns it formed in the main were all flat top patterns. So it would pull back. There were a couple of bear flags in there as well. Oh, sorry, bull flags in there as well, which were good breakouts. But most of the times it went up to a level and it formed a flat top and then broke that level. So it was very easy to trade Agri yesterday after I finished the stream. So that's why I was able to make that extra $7,000. So just be careful when you're doing it, and don't overstay your welcome. The joke's on me. You don't even understand what you're seeing. Well, it's not on me. That's down to you to educate yourself. But you know, I'll try my best to help you. What's my availability percentage gain a day? I don't know what that question means, but what is my anticipated percentage gain a day? What's my goal? I want to get, I'm looking, a minimum of 5% a day is what I test myself. I've got an ultimate goal across the year to average $5,000 a day, but I look to grow my account to a minimum of 5% per day. So that's what my goals are on a daily basis. What's the name of the website? Just go into my link tree and click the links. Swipe left in my profile. There's a little link there with some arrows pointing to it saying, if you want to earn money online, click this link. Just click the link and you'll get there. What broker is best for the UK? Which do I use? I just get down there. I use Interactive Brokers is good. I use Interactive Brokers. I've got a couple of accounts with Interactive Brokers, and I use Capital Markets. So Capital Markets have just recently opened a UK division, which is now a .co.uk, Capital Markets .co.uk, I think it is. So they've just opened a UK division. Now I'm still with their Trinidad division, so I'm still offshore with them as opposed to UK, but I use CMEG and IBKR. What is my trading capital? Today we're starting with little over 73,000 today. Don't force anything, Matty. Don't force anything. And there you go. Matty's trading with Trade Zero, and he's having good experience with them. So, you know, the Nasdaq is down. So someone asking me what's the Nasdaq like at the moment. No, actually the Nasdaq's trading sideways at the moment, just above the volume weighted average price, but it's 1.3% up on the day. How much is Nike stock? I can have a look for you. Have a look. Pull up my trading view again. Nike. So Nike is currently trading at $127.84. That's what it's at. So if you like Nike, why not? They're gapping up on the day, so slightly up on the day. I'm glad you only lost $7,000. It could have been a lot worse, but be careful. Start small. If you lost $7,000 5 years ago, this time if you're going at it again, only risk what you can afford to lose first and foremost. Most people do lose. The majority of people that get involved in the markets, over 80%, 85% of people lose money in the markets consistently. They never become profitable. Just bear that in mind. Only put enough money in that you're prepared to lose. So don't be going gambling the kids' college fund or anything like that. It's not worth it. And start small. Start in a simulator. Get profitable in a simulator. Then start small. Being able to make 20, 50 bucks a day to start off with, that's a good starting position. And then slowly increase that so that you're getting to 100 bucks a day. And if your goal is 100 bucks a day, you're risking 50, etc. So you've got a max loss on the days the same. So just start small. Which platform am I using is Daytrading Pro, and I'm using capital markets at the moment. But I also use I don't trade forex. I've already said I don't trade forex, so I don't comment on forex pairs. Daytrading Pro is a platform. I'm using Benzinga for the scanners. I also use TradingView for the charting. The broker I'm using is Capital Markets Elite. How many indicators do I use in my analysis? It depends on the strategy that I'm executing against. My momentum strategies, my gap and go strategies, those strategies that I would typically use the one technical indicator, which is the volume weighted average price. I keep my charts relatively clean. I've got two histograms, one sideways, one vertical, one horizontally, one vertically. The vertical one is volume. And then the horizontal one is also volume, but volume by price. So those are the only things that I'm looking for over and above the candles themselves. So I keep my charts relatively clean. When I'm looking at doing more technical analysis, if I'm doing reversal strategies, for example, I might use the Bollinger Bands or the RSI or the MACD even. So I might use more technical indicators depending on the strategies I'm actually trading. And that's the way it should be, Matt. If you don't trade, you don't trade. Right now, over the last 15 minutes, there's nothing over $3 moved in any way, shape, or form. I mean, the scanners are almost empty over the 15-minute period. The very few tickers on the session period. So it's a very quiet pre-market. We should see some volume enter after the bell, but we've got another hour and 15 minutes before the bell. So how's my email blacklisted? You say my email is blacklisted. How do you mean my email is blacklisted? Just click on the link in my link tree, and it should open up my email. You can just send me an email. Just to have a look. Is my email blacklisted? Many blacklists are openly available, such as net. If you want to see whether your domain is being blocked by a specific site. Okay, I'll have a look at that later. Blacklist. Let's see. Okay, so just getting checked. I'm just doing MX Toolbox. So you said my email's blacklist. I'm just checking it on MX Toolbox, and it's there's like 97 different blacklists here, and I'm okay. So it doesn't look blacklisted on all the. So hustlewithtony.com doesn't look blacklisted. My domain isn't blacklisted on the MX Toolbox Super Tool. So I don't know where you're getting the idea that my email is blacklisted. Hey, Frederick. Okay, so I've got an email from Andrew Henry, who's been watching the stream. So he's found my email. Okay. Okay, so I'll respond to him if Andrew's in the stream. I'll respond to him. So no, I've sent a mail to Constantine. I actually I sent you a mail already. So check your inbox. I think it's on your side that's blacklisted as opposed to mine, because I did send you. Where's my sent? All right, I didn't. It's not showing up in my sent list. So I'll send you. I responded to you on Instagram, but no worries. I did respond to you on Instagram, but I thought I sent you a mail last night on through off my mobile. I'll double check that it's actually gone after the stream, and if not, I'll send it to you off my desktop. No problem. So back to the live stream. Okay. Which sector do I think is in trend today? Well, there's nothing at the moment. There's absolutely nothing at the moment. If I'm being completely honest, we've got Marigold is the only one that's actually got any kind of volume, and that's selling off. It's been selling off since 7 o'clock. So it popped up at 7 o'clock and went up as high as 755. It retested the 750 level 5 minutes later, and then it's been selling off since. So Marigold's kind of a bit of a damp squib as well. So that's going to. Sunworks is moving upwards. It's still red on the day. So that's another cannabis stock. So maybe the cannabis sector might move. I mean, I've got very, very few tickers that are gapping up today. So it looks like I'm going to be waiting for the P&L update. Yeah, okay, so P&L update. We are currently sitting at 63,694. That's the equity starting position today. Yesterday, as per my summary on YouTube, we had 3 winning trades in the end. We took a trade with Imperial Petroleum. We gained $1,800 with them. We traded Wave Energy. So again, in the energy sector, but it was it's alternative energy, Wave Energy, so renewable energies. And we just shy of $2,000 green on that one. And whilst we took an early trade with Agri, our first dip into the water with Agri was a losing position. We actually turned that around, and after the stream, and I recorded it and put it into my summary last night and posted that on YouTube. So you've got the rest of the Agri trade. When it broke out, it broke the highs that I originally got faked out on. It broke those highs, and it went on for another, $1.50, $2. So that was a good. It was good movement yesterday. So yesterday we did $10,000, over $10,000 in trade profit and loss, and after charges and commissions, etc., we were a little over 9,000 in the green. So where does that put me? So 9,300 in the green. So where does that put me on the month? So whilst we've got an equity position of just under 74,000. We're actually in profit to the tune of 44,500. So it depends. See, this is the thing. So Finviz, Benzinga, Yahoo Finance, it's all the same tickers. It's all the same thing. It depends how you set your scanners up. So if I work with Benzinga because to me it's just so much easier. It's so much more intuitive. It gives me the information that allows me to be profitable. I'm allowed to pick the right tickers at the right time, the right stocks at the right time. That's why it's great for me. But I pay for it. I pay a premium for it. So if you want a free service, your FinViz, your Yahoo Finance, and things like that, you can get the information from there, but it's just not as intuitive. And that's what happens when you go for a free service over a premium service. It's always going to be the case. What websites do I do for different stocks and the stock names? Benzinga. Benzinga, I use Benzinga Pro. So if you go into if you go into my link tree, there's a little one of the links there says select the stocks or pick the stocks. If I find my little link tree again, if I go in there, it says to find stocks to trade, I use Benzinga scanners and trade alerts. Try free for 14 days. That's what it says. And you just click on that, and it should take you to Benzinga Pro. And if you go there, you can then configure it in similar ways that I configure it to get your scanners and alerts and things. Quite scary to trade now with the high volatility in the market. Okay, so I get where you're coming from, and this is a psychological thing. This is a trader mindset thing. If you're used to, investing, value investing, and long-term investing, then absolutely it can get extremely scary. The volatile markets, the ups, the downs, the big swings one way, then the big swings the next. However, the two things that are our friend as day traders are volume and volatility. Without the volatility, we don't get the moves to take profits on. And without the volume around that volatility, we don't get the reliability on those moves. So this is where stock selection is key. You want to be picking stocks that are ready, that have high relative volume and that are ready to break certain resistance levels or are trending in a certain way. So stock selection is a key part, and that's part of the course as well, is stock selection, going over how to pick stocks that are potential movers, stocks that are, you can gain potential profits from, and also your entry points in those stocks. Jumping in just because it's moving is a recipe for disaster. Yes, you might get in and get out quickly, but in some cases, you get in at the top and then it pulls back and reverses on you. So just be careful if you're chasing momentum. So trading volatile markets, you'll always make more money on an intraday basis trading a volatile market than you will trading a rangy sideways market. Because if it's ranging sideways, there's no moves, there's no trades for us to take. So yeah. Right now, I'm not trading because there's nothing to trade. So Marigold is currently at $3.90. Like I say, it's been selling off. It moved up. It closed out yesterday. I think it was an IPO yesterday, actually. But it closed out yesterday at 217. It went up almost to 890, 889, 890. It's now down at under $4. So it's retraced the gains that it made overnight. It's retraced more than 50% of those. So unless it gets back above $5, I'm not really interested. It needs to be above the volume weighted average price for me. So I'm not trading Marigold. It's sold off way too much. It's retraced too far. It needs to make another move and set up for some more trades. Right now, there's nothing for me to trade. Hang on a minute. Oh yeah, no. Pearson's not. It's low volume, so Pearson's not even a good trade yet either. Might change after the bell. The energy stocks might come back into play. We will get a continuation in that sector. Something else might come into play. We've got half an hour till 9 o'clock. We might get a news release at 9 o'clock market time. You never know. Sometimes it's about just being patient. And if there's nothing happening, then there's nothing happening. You don't have to, as a day trader, doesn't mean just because the word day is in the title, doesn't mean that you have to trade every day. It doesn't mean that you have to make gains every day. You want to trade the quality setups. If you're trading the quality setups, you'll be profitable. If you walk away from the poor ones, then you're walking away from losses. And that's what we want to avoid. I can see Mara and Riot are trying to pop up on low volume. So that gives me an indication. I've not even looked at the crypto sector today. Let's have a quick look at the crypto sector. So crypto's up. Oh, that's okay. Bitcoin's up a percentage point. Ethereum's up 1.5%. Cardano's up 0.5%. XRP is up 0.6%. So my holdings in crypto are making a gain today after losing ground yesterday. So Bitcoin's back up to 39s, back up to 40. It's around the 40,000 mark. And I'd still want it to get up and above 45,000 Bitcoin, and it will. But once it does, I can see once it holds 45,000 and doesn't just, tease us with it. Then I think it could make a big move to the upside. So the S&P 500 is down up a percentage point. Nasdaq 1.5%. The Dow Jones is 0.9% up. The FTSE is a little over a percentage point up. The DAX or German 40 is 2.6% up, so that's making good. The Hang Seng's 1.4 up. So the markets are up, crypto's up. It's at the moment it's looking like it's a good a recovery day, if you will. So most markets are moving in an upwards basis today, but the stocks aren't. The stocks aren't moving at all. So let me just have a look. I'm just going to change this to gainers and losers. I just want to see if there's a lot of red. Oh, actually, yes. So I'm scanning for gainers. If you look at the losers, there's a hell of a lot of losers. So DocuSign's down 17%. KLX Energy's down 18%. Tilly's is down 22%. So there's a lot more losers than there is gainers. So it might be a day to short the market. I prefer to go long, take long positions, but if there's nothing moving, sometimes you chop and change it and have a look. Do I ever trade the UK markets? No, I might invest in some companies more long term or swing, maybe do some options on the UK markets if there's an opportunity to make money. But from a day trading perspective, no. But I keep telling everybody that the two things that are your friend as a day trader are volatility and volume. And while you can get volatile moves in the UK markets and the European markets, or even the Hang Seng over in Hong Kong, you can get volatile moves, but you don't get the volume. So when the pattern's set up, they don't break out as predictably as they do in America. So the majority of the world's day traders are trading the US markets, regardless of where they're sat. And we want to follow the crowds. We want to follow the volume. So when we follow the crowds, when we follow the volume, it just gives that little bit of predictability, more predictability to those pattern breakouts. Agri sold off today, so it's down on the day. It was good yesterday, but it's down. It's now. Agri is. Agri is currently just under $3. It went up to 550. 514s. It went up to 515s yesterday. It's down at below $3 now. It kind of sold off after after lunch. So yeah, 2 o'clock onwards yesterday, it's been selling off 2 p.m. market time. So agri, there's no trade with agri, and again, it's low volume as well. So there's not the volume, and this is what I'm saying. This is why I don't get married to stocks, okay? Because agri yesterday was the big ticker that moved for me. It was the big stock that moved for me. And if you look at you know, the way it's set up and the way it moved up, it was great. It was a great day to trade it. It made big moves. And it made them in a predictable fashion. Some of the patterns and the breakouts were relatively predictable, and that's a good thing. So if we talk about agri, it went up yesterday and then it just sold off. So a lot of these companies that I trade on an intraday basis that make big moves they are volatile. They make big moves with good relative volume. Agri, if I look at that went up to over 200% move on the day, and I captured a large slice of that. But the last time it was over 250, just look at it on the weekly. The last time it was over 250 was last year. It was November, when it also made a big move. It moved up to 750s last November. So a lot of these companies, they'll pump on a particular day and then they'll just fade away and sell off. And some of them, you won't ever see them again. So let's have a look at my little running joke, which is CEI, which is barcoding at the moment. It's barcoding at between $1 and $1.02. So CEI made a move, and it's in an energy stock, so it's having a good moment with the energy sector as it stands. So last October, I traded this one as well. And it went up to almost $5, but it got the Wall Street Bets crowd, Reddit crowd behind it, and a lot of social media and things, stock twits, all talking about it, and it made big moves on social media, made big news on social media, and it dropped down. So in October, it traded up towards $5, and then it sold off a week later, and it's never seen the north side of $2 since. And I doubt it ever will. So, you know, some people say, oh, it's going to go to the moon, and they're still holding bags at like $3.50, $4, and they're still holding it, thinking that it's still going to. And it's this hodl mentality that I don't understand, is that you buy something and hold it forever thinking it's going to moon. A lot of the people in this so-called AIC community that are still holding AMC at $15 when it went up to 72 last year, thinking it's going to go back up there. It's not. So you've got to realize that a lot of these companies that we invest in as intraday traders, they're garbage. They're absolute nonsense companies. They make a big gap. They gap up and make a big move on a particular day down to a news catalyst. So they have their moment in the sunshine, and then they're gone as quickly as they appeared. So if you try and hold these companies overnight, or if you hold them over for a couple of weeks, you're going to lose your money. So you don't get married to these garbage stocks. If it's not a Fortune 500, if it's not a company that you fundamentally believe in, don't hold long-term positions. It's as simple as that. Oh, it's why do people say hodl instead of hold? I don't know. It's just the trendy Gen Z thing to do, isn't it? It is hard to swing trade, which is why you need to do your own research. If you're swing trading or value investing, you really need to look at the fundamentals of the company. I really don't care about these companies. I really don't care about the fundamentals of these companies. If I'm trading it and it has a good day and I make profit, I'm in today, I'm out today. I don't care what happens to it overnight. I don't care what happens to it tomorrow. I've made my profits with it. If it runs again tomorrow, I'll do the same tomorrow. I don't care. But if I'm going to be holding a long-term position, medium to long-term position, if I'm swing trading it, I need to know that it's not going to be a pump and dump. I need to know that I'm not going to lose my money overnight. I need to be setting strict stops on a swing trade, that if it reaches a certain point, regardless of what time it is, I'm out. So swing trading, the accuracy around swing trading can be much less, but very often with swing trading, you're going for bigger gains. So you're very often swinging for home runs a lot of the time. No, I've got 4 screens. So I've got one here on my laptop. I've got one here, which is my actual action, which is where I'm trading. This is my watch list. So I've got 8 different tickers here that I will put on from my watch list. This is just garbage from the last couple of days, mostly energy stocks. So normally I put 8 tickers to watch on there, so I can watch the action while I'm trading. And over here I've got my utility window, shall I say. So I'm checking emails, I'm checking my options chain, I'm checking my YouTube stream, I'm checking my trading view or trader view, whatever it is. So I've got 4 screens at any one time. Do I close that straight after I earn profit? It depends on the momentum on the price action. If it's still going up, I'll hold a position. But once that move is finished, I'll get out and I'll exit my position. So the idea is that I might hold a position. In fact, I'll tell you exactly with my journal. Where's my reports over the last? I'll clear that. Detailed. So my average hold time. My average hold time is 42 minutes. So when you put it, the average hold time is from when I enter a trade to when that trade's complete. So there might be several rounds in that trade. A round is like when I buy 500 shares and I've sold 500 shares. That's a round. So it's a net zero. But then I might buy another 500 shares and re-enter, and then sell 250 shares. And then I'm in there for 250. Then I'll buy another 250 shares, make it 500 shares again. And then I'll sell 500 shares. So it's a net zero. But from the very first time I bought 500 shares to when I sold the last lot, that's my hold time, according to on the way that this calculates it. So typically a round might be a couple of minutes for me. I might hold for a few minutes. My percentage win rate overall is 75%. I'm just looking at the stats here on TraderView. So overall, since I started using TraderView, I've done 907 winning trades and 276 losing trades. So 75%. So what one in four is a loser for me, which is a fantastic percentage. Most people have accuracy between 50 and 60% if they're profitable. So me being 75 is not normal. It is very high. It is very high. It's not that's not it's not typical. You'll get scalpers with percentage accuracy like that. But if I look at my over the course of this last 12, 13 months, my profit loss ratio is not where it needs to be. Needs work. So my risk versus reward ratio needs work. The reason I'm profitable is based on my accuracy at the moment, because my risk versus reward is about 4 to 3. It needs to be 2 to 1, but it's 4 to 3 at the minute. So I need to work more on my risk versus reward, and it doesn't help that I'm taking profits along the way. So if I enter a trade and I'm getting my idea is I've got 10 cents on the risk. I'm looking to make 20 cents. I take profits at 10 cents, so I might take half of my position off at 10 cents and just lock in some profits, and then ride it up to the 20 cents and beyond. If it doesn't actually hit the 20 cents, that's impacting my profit loss ratio. The actual trade plan is right. I'm just taking profits a little bit early, and that's just for me on my confidence level. It helps. Just locking a little bit of profits gives me a little bit of cushion on the ticker, and it helps me with my trading. But realistically, you still want to have trade plans. You enter a trade with a 2-to-1 profit loss risk versus reward in mind. So yeah, I need to work on my risk versus reward. But what's compensating for that at the moment is my accuracy. I have a few strategies. that I use: gap and go strategy, momentum strategy, breakout strategies, or range breakouts, reversal strategies. There's a number of different strategies I will use. The one that's most profitable for me, the one that I use the most, is the gap and go strategy. So at the open, so this is why I come in and I start looking at the charts and I build up a watch list. Pre-market, I'm looking at pre-market highs. I'm looking for significant support and resistance levels pre-market. Excuse me. I look at that on the 60-minute and daily time frame as well, just to see if there's anything I can spot. And then as the bell opens, I'll be watching a particular ticker, and if it starts to move in a particular direction, what I want it to do is, it's been gapping up, and then I want it to go at the open. And I can jump in with big size at the open, ride it up, take some quick profits, and ride it up a bit more. If it starts then to pull back, I can get out, and I've made profits on the day on that ticker. So why do I go for stocks under $4? I don't. Typically, my sweet spot is between $4 and $25. That was where the majority of my trades take place. I don't trade anything less than $3. I don't trade if it's less than $3. If it's less than $2, I get no margin on it. That's the first reason I don't bother, because I get no leverage from my broker if the instrument is less than $2 a share. They only give me a 2-to-1 between $2 and $4. So you know that's why I try not to trade stocks between $3 and $4. But I will do if there's nothing else going. Okay, and I try not to trade stocks above $40, $50 because I'm usually starting each month with a $30,000 account. I'm taking my profits on the previous month and doing that. And Samui, yes, Samuel, I don't know, Samui L100 or Samuel, yes, I do affiliate marketing. That's one of my income streams. So I have multiple income streams. This is by far where I make most of my money. But I do affiliate marketing. I have a website dedicated to affiliate marketing, and have affiliate partnerships with a number of different companies. I have my consultancy business. So funnily enough, I've just got a consultancy request this morning from, where is it? Alpha Sites. So Alpha Sites want me to do some consultancy with them for one of their clients, and I charge $400 an hour for that consultancy. I've also got my e-commerce businesses as well. So I've got an Amazon store, I've got an eBay store, I've got a Kindle Direct publishing account as well. So yeah, I've got multiple streams of income. Yes. How many years do I trade to get this high percentage win rate? So that's over the last, that's only over the last 13 months. So that, before that, I wasn't profitable. Michael, 10 cents I'm talking about. So if you buy 3,000 shares, let's say it's $10, just for nice numbers. If you buy 3,000 shares at $10 and you're risking 10 cents on the share, okay? So that's like you say, you're risking $300 on that trade. But you want to be able to, if you're going to risk 300, you want to be making, you want to be able to make at least 500-600. Or the possibility to make 600. So I've been trading since 2020. I've been trading since we got locked down in the pandemic. I'm a relatively newbie myself, if I'm being completely honest. So I was trading. I started in June June 2020 and lost a hell of a lot of money, if I'm being honest. Like most people, most people that get into markets lose money. Most people that get into the markets are not profitable, certainly when they're learning. And I, as a new trader, I was no different. I lost money too. Yeah, absolutely. The more income streams you've got. So the question here is, can you trade and do affiliate marketing at the same time? The beauty of affiliate marketing is once you put the initial work in, the rest is on autopilot. So once you've got a website set up, I've got a blog. I just need to update. At the weekend, I'll just update that at the weekend and put some blog posts up there. I'll have that. I'll write some blog posts, or I'll get some blog posts. I'll go onto Fiverr and get someone to write me some blog posts. And then I'll automate the posting of those throughout the week, so I don't have to do it. And people that go on my website and click through those links and buy it, I get a commission from that. So affiliate marketing is relatively passive for me. I don't have to do too much for the affiliate marketing. I've just created this digital course, so it's a digital asset. What I know in trading, and based on the comments I'm getting in the chat, what I know about trading is what a lot of people want to know about trading. So by creating a digital asset that gives people that ability to purchase that digital asset, i.e. in the form of a course, that's another passive income stream for me now. The only thing I now have to do with regards to that course is someone signs up, I'll engage with them and give them some one-to-one guidance, and over the course of the next month, they can have 90 minutes of my time in terms of getting a bit more clarity and direction on trading, and it costs me very little, except for the time. So if that continues to grow, then I will hire someone else to help me with that. So yeah, affiliate marketing is not instead of trading, it's in line with it. So I've got my e-commerce stores, I've got my consultancy, which usually takes place in the evening for me, which is like afternoon, early afternoon US time, because the majority of companies that I consult with are based in the US. So that consultancy takes place in the evening. So I'll have my dinner and I'll let them know when I'm available. I'll get a phone call, say 7:30 p.m. As long as there's no football match on that I want to watch, 7:30 p.m. I'm on the phone for an hour and I get paid $400 for the privilege. I mean, that's another one. So the more income streams that you have, the better your future looks. Just think, you're working a 9 to 5 and you get caught with COVID. You're in hospital for 6 months. You get a really bad COVID situation. You're in hospital for 6 months. Are you insured? Is your boss going to still pay you? How are your bills getting paid? Because they don't care about your feelings. They don't care about the fact that they don't care about your health. Most of your bosses don't care about your health. So having multiple income streams for me is the only true way of having financial security. Did I do any courses or did I go in blind? Unfortunately, Jav, I went in blind, and that's why I lost money. I went in thinking that I knew about investing, because value investing. I've been doing it for about 10 years or so, longer, and I thought I knew everything. I'm quite arrogant in my personality, if you hadn't quite noticed, and I get a bit cocky sometimes, and that's what I did. I went into the markets thinking this is easy. I just buy low, sell high, and in principle, that's all you do. In reality, it's a lot more complicated. So one of the entries I couldn't understand to start off with is that when I was buying, why was it always going the opposite direction? It was like, I felt like as if the markets had an agenda against me, a personal agenda against me. It was like, hang on a minute, you're moving up, and as soon as I buy, you decide to switch direction and change momentum, and you're going down. And then it was like, okay, well, I'm going to short the market. So I'm going to short here, and guess what? It went up. It was like, as if I felt I had the magic touch, the Midas touch in reverse. I was just losing money all over the place. I was trying to trade futures. I tried to trade Forex. I tried to trade equities. I even tried to day trade crypto, and I was losing money all over the place. Thankfully, I am a quick learner. and I'm able to spot the mistakes that I was making. I ended up submersing myself in it, doing a bit more studying, learning how to do charting, learning how to do technical analysis. And that is a key fundamental principle of being successful in day trading, is to be able to read charts and do the technical analysis part of it. Then I was able to start spotting the patterns. I mean, my personality, I've got an engineering background, I've got, you know, a little bit of ADD and stuff, neurodivergence or whatever you want to call it, which allows me to see things visually a lot easier than when I'm reading. I mean, dyslexia doesn't help with the reading either, but I'm able to see things visually a lot better. So I'm able to recognize the patterns on the charts. So I'm able to recognize wedges. You know, the various cup and handles, the flat tops, the flag formations, all of this. So geometric shapes, I can see them taking place, and it's not difficult. Once you start recognizing those shapes taking place, it becomes a lot easier to recognize, okay, well, there's a potential entry signal coming up here. If it does X, Y, and Z, then I can get in on A, B, and C. And you know full well that it's not 100% in your favor, because sometimes it will fake you out. And in that, but the thing is with these patterns is, if you're trading these patterns, you know if it goes one way, it's going to go big. If it doesn't go and goes against you, you can get out really quickly for a small loss. And that's all to do with the risk management piece. So it was difficult, and I lost money because I didn't have a mentor. I didn't have a plan. Nobody presented that to me. So it took me a while to actually get that in place. Now, with the course that I've done, Jav, all of that's there in black and white. You can actually print off the cheat sheets and have them next to you based on the strategies that I teach. You can print off the cheat sheets and have them next to you when you're trading, and you say, okay, well, this isn't quite right yet. I want to be waiting. I don't want to be buying the bottom of this pullback, because I've not got any signs it's going to reverse. It might continue pulling back, and you'll wait for the reversal indicator and the entry point, and you'll see maybe it's a bull flag and it's pulling back, and you're then waiting for that entry point for the reversal. And all that comes with time. All that is knowledge that I've picked up over time. It's not something that I expect anybody to know. People new to this stream probably don't even know what I'm talking about now. It's just gobbledygook. Bear flags, bull flags, ascending wedges, descending wedges. What's this guy talking about? But when you submerge yourself into it, it becomes common knowledge. It becomes second nature. So, yeah, I perhaps should have paid some money to take a course. I know there's some really good ones out there, but there's a lot of crap as well. So everything in my course is freely available on the internet. I'll be completely transparent. You can go and spend hours searching for everything on the internet. If you want to search out, you know, gap and go trading strategy, day trading strategy, it's there on the internet. You can find it. Your momentum day trading strategy, you find it. It's on the internet. It's easy. Go out and find it. That's what I did. What I've done is I brought it all down together into a single place, consolidate it with a few other pieces like the psychology of trading, like the risk management principles and all of that into one place. So you now, with that course, have a trading plan of action, a business plan to go into the markets, learn how to trade, and become profitable, and potentially even become a full-time trader. It's up to you. When did I break even from the initial losses? Probably about a year ago, about February, March last year it would have been. The biggest mistake is throwing the money into the market and trading with real money before you're ready. How much to get started, though? I mean, it's how much can you afford? How much can you afford to lose is the thing. So I lost my job as a result of the pandemic, and had a very successful career up till that. Look me up on LinkedIn. You'll see what I'm talking about. I'm very fully verifiable. My background is in the technology world. I was considered a thought leader within the tech space, but I lost my position due to the pandemic, and the world was closed. So I needed to earn money, and I had savings. I had my little nest eggs and things, but I got a nice little severance package from my employer, and I put that into the markets and pretty much lost it all over the course of like 4 or 5 months. So, it's difficult. It is difficult to start off with. The emotional element is one of the biggest hurdles that you're going to have to overcome. And whilst I can give you the fundamental principles of how to be profitable in day trading, I can teach you all of that. I can teach you about the principles of risk management. I can teach you about the strategies. I can even show you where the entry signals are, where the exit signals are. I can do all of that. There's no substitute for you actually doing it yourself. The psychological piece, the emotional piece, is something I can't give you. And if you're risk averse, if you don't like risking 20 bucks, this is not the job for you. This is not the career for you. Just remember, and I say this every single day, and I say it multiple times, because I don't want anybody thinking that they can get into the markets and do what I do. Because the likelihood is you're going to get into the markets and lose money. So be prepared to lose money. What the success that I've had over the last year is not typical. It's not normal. The majority of people lose money in the markets. The fact that I can give you a strategy for you to practice in a simulator first, practice with paper money first, get good at that, build up that muscle memory, but build up the ability to actually execute on your exit points. Start putting stop losses in place as opposed to relying on memory stops or mind stops. And build up your skills in a paper trading account first, and then go small size. So try it with, you're risking what, 50 bucks a day. If you're risking 50 bucks a day, if you put $1,000 into an account and you're risking 50 bucks a day, can you afford to lose 50 bucks? That's going to give you a month's trading. If your maximum risk is 50 bucks a day, it's going to give you a month's trading to practice and try and become profitable before you blow up your account. So start small. You're risking 50 bucks a day. Maybe you risk 25 bucks a day, and to gain 50. So your daily goal starts off at 50. Once you get a couple of weeks, you think, okay, I'm consistently getting out of four out of 5 days I'm green, and I'm getting 50 bucks or more each day. So I'm going to increase my goal, and it's now not 50 anymore. It's 100. And instead of risking 25, you're now risking 50. And then you continue with that. 4 out of 5 days a week I'm green, and I'm actually overachieving against my daily goals, my weekly goals. So you increase it again, and you move to 200 and 100, and do it slowly and build up your confidence that way. So the difference between me and the average trader, people come onto my stream watching me trading, and I'll like take 10,000 share size, 25,000 share size, or whatever it is, and they'll see I'll go into the red for $2,000-3,000 unrealized, because I've got my risk levels already mapped out. I'm looking at what the previous lows are and where the support levels are. And I've got my risk levels mapped out. So I'm not being phased by the P&L that's unrealized. Whereas people are looking at that and thinking, he's already $3,000 in the red there on the screen. He's down $3,000. They're not factoring the spread. They're not factoring that I'm getting in on a breakout or whatever it is. It's just decided to consolidate before it broke out. And there's all different factors to take into account. And that emotional piece that I've developed, the emotional strength that I've developed from trading over a period of time, is not what someone new to the markets will have. So they will be trading in the markets, and they'll get $1,000 down because they take a big size. They take 5,000 shares and they get 20 cents down. That's $1,000, and they'll sell, and then they'll kick themselves as they watch it turn around and go without them because they didn't stick to the trade plan. Likewise, the other way is they'll hold on too long, and when they should have cut at 20 cents, they'll hold it to 25, and then it'll flush and it's 50 cents down. So instead of cutting at 20 cents per share, they're now 50 cents per share down. So 1,000 shares, that's 500 bucks. It adds up. So you need the discipline, and that comes with practice. That comes with time. And I look back, and whilst a lot of my initial trades were frivolous and didn't follow a strategy or a particular plan, a large part of it was I didn't have the muscle capability. I didn't have the resilience around that plan in the first instance either. So I was cutting my my winners too early, and I was holding my losers too long, and that happens with most beginner traders. Thanks for my help. Where do I find online? Have you actually looked into my profile here on TikTok? There's a link there. Click that. It takes you to my link tree, and the first link in my link tree, that's where you find it. How many hours do I work on trading each day? So if I'm not streaming, if I wasn't streaming, I'd be starting now, and I'd be working for 90 minutes, maybe. So if I wasn't streaming, the only reason I'm doing this longer is for the stream, because I can trade from 2 hours before market opens. So normally, over the last year or so, I would be coming to my laptop. I've done whatever I've done in the morning, have my lunch, come to my laptop, and I'll be taking a position here, setting up my scanners right now. They're already set up. I'm setting up my scanners right now to build a watch list. So I'm ready at the market open. I'll start looking at the action to see if there are any pre-market trades I can get in before the market opens. But typically, I'll be looking for some action at the market open, which we're half an hour away from. So an hour, 2 hours max. Normally, what are we doing? At the moment, I'm working 3. Yesterday, I did about 4 hours. Most days, I'm doing 3. I've got the stream set for 3 hours. And I'm trying to build up this following, so I'm doing 3 hours live every day. I don't know about being a teacher at heart, but I don't mind sharing my knowledge, and all in, it's poker. I don't mind sharing my knowledge, and I got so much demand. That first month I was streaming, where I did the small account challenge, and I went from 5,000 to, well, actually I went from 5 to over 100,000 in that month, and then gave it back off the top at the end of the month. But the feedback I got from so many people that were watching the stream, that was like, I want to learn how to do it. Please teach me how to do it. Either in the stream, via Instagram messaging, or via direct contact on my email, or whatever it was. People just shouting to me, saying, look, teach me how to do it. Now, I've got to say, a lot of them were asking me, teach me how to do it for free. And I'm like, okay, you want me to give you a skill set, you want me to give you a knowledge that potentially gives you the opportunity to earn thousands, not just annually, but daily. I'm going to charge for it. Now, I'm not going to charge a lot. It's 150 bucks, and it comes with a money back guarantee if you're not happy. So the fact that a lot of them have scorned on that I find a little bit humorous. But you know, you do you guys. If you're not prepared to invest 150 bucks in yourself, the likelihood is either you don't have the money, so it's all frivolous anyway, you can't invest in the markets because you do need money to invest in the markets, or 2, you're not serious, you just want something for nothing, and you're the type of person that would enter the markets with a gambling mentality and lose anyway. So that 150 bucks I'm charging for the course is really, it's a gateway to enter. That's the way I'm looking at it. Michael, would you stop with the CEI, please? It's back below $2. Let's just say that much. I think it was back around. I was on about CEI earlier. It's a horrible stock. So it's ranging. It's barcoding at $1. So $1.02. It's barcoding between $1 and 2 cents. That's CEI. Horrible stock. Yeah, 50 bucks won't cover my computer screen costs. Exactly. I mean, the electricity here probably on a monthly basis is costing me more. But yeah, I mean, like I said, I do consultancy for various tech companies, and I charge $400 an hour. So the fact that as part of that course, I'm giving you 90 minutes of my time for free. Well, I'm giving you 90 minutes of my time included. That alone is worth its weight in gold. So I value my time, and I just hope you guys too. You don't need all these screens. You need one screen. Ideally, I would say two, because you can have your scanners on one screen and you can be trading on the other. But you don't need. I've got four monitors, and I just find I'm more productive because I've got more things I can do. I can multitask. But if all you're concentrating on is trading, then you need your scanners on one screen and you're trading on another screen. So two screens. So if you've got a laptop, you've got your laptop screen and one monitor. That's sufficient. You went all in on Doggy in 2019 and all in on Shiba in 2020. So I hope you got in early before they hit the major exchanges. So the problem, and I say this to everybody, if you're going to be trading in crypto, if you're expecting a big gain in crypto, you need to get in before they hit the major exchanges, because pretty much all the gains are made once they all the big parabolic gains are made before they hit the major exchanges. Once they've hit the big crypto exchanges like Coinbase and things like that, you're going to see maybe 10-15% swings here or there, but you're not going to get the parabolic moves in crypto when they're listed on these major exchanges. Not on an intraday basis, at least. You can still see big gains, but it'll be over a longer period of time. So yeah, I made money out of Dogecoin, and then threw it away. So I made money out of Dogecoin and then put it into the stocks and lost it. Same with Shiba Inu. Made a killing on Shiba Inu, and then and lost that as well. So go figure. But I made quite a bit on Neo as well. Someone's talking about the EV manufacturer Neo. I made quite a bit for that. Okay. I have these sweet computer monitors. I've only got three monitors and a laptop screen. So you want lessons where you can start from to grow your capital. Okay, so Federico, you've got two options. If you want to, depending on how much capital you're talking about, you're either looking at value investing, which is more of a long-term situation. You put your money in and you forget about it, with the exceptions to add to it and grow your money that way. And I'm doing that. I do that every month. I take money out of my broker account and I redistribute it to my other holdings. And or you want to be looking at taking a brokerage account and day trading, which is incredibly risky. And the question there is when you say you want lessons, which is you're looking at investing, which is relatively simple. You buy and hold, buy the dip whenever there's a dip, add to your dollar cost averaging, add to your position, and hold for the long term. Because ultimately, if you're buying like an index fund, for example, if you're buying an index fund, in the long term, you're only ever going to make money. You're going to make money between 8 and 12%, depending on which index fund it is, and that's going to be good for the long term. So you can invest $500 a month. And you'd only need to do that for 10-15 years and then leave it and let it grow for another 10-15 years, and you should be set. Hundreds of thousands, if not millions, already. So that's investing. Now, day trading is a little bit different. There's a lot more psychology involved in it. There's a more human element about it. The technical analysis is relevant. So if you're an activist investor, you get a bit more involved in the fundamentals. But if you're just looking to grow your capital, simple investing is is what you want to be doing. If you're looking for lessons in how to day trade, I've just spent the best part of an hour promoting my course. So I've turned into a shill. I'm a sellout. I'm already a sellout. How long did it take? Well, I've never been short on confidence ETF, so that might be something that comes across on the stream. If it isn't, and that is, I could say I've never been short on confidence. So building the confidence is not something that it took me a lot to do. So mutual funds, index-linked mutual funds, yeah, anything that is performing well. Vanguard does perform well. You know, just stick it in the spider, something like that. The SQQQ, something like that. Louis Vuitton. Oh, nice. Hello, cool folk. Welcome to the stream. Dump it all in crypto. Yeah, okay. Well, actually, that's not such a bad idea. I laughed at that. Dump it all in crypto. If you dump it all in, I wouldn't say dump it all in crypto, because if something happens to the crypto sector and it absolutely tanks, you could be left holding huge bags. So diversification is important as well. However, are there still huge gains to be made in mainstream crypto investing? Absolutely. So you saying dump it all in crypto is not necessarily bad financial advice. I'm not offering financial advice, by the way. I'm not a financial advisor. So don't take what I say as financial advice. What I say on this stream is purely my own opinion, and I say it for entertainment and education purposes only. Okay? Now, you saying dump all your money in crypto, I'm very bullish on the crypto space. I think we're only seeing the tip of the iceberg at the moment. When you start factoring in, you know, mainstream institutional investing for crypto, we'll get institutional investors already, but I mean, when it becomes mainstream, we'll probably see a maybe even tripling of the market cap of the crypto space. Then we've got the whole metaverse concept coming in, where you can actually earn crypto dollars in the metaverse, either by working there or by gaming there. So then we get the concept of crypto gaming. Nice little segue there. See what I did? Crypto gaming, where you can actually earn funds, crypto funds, from playing games. Now, this is going to be big in the future. So the crypto space is going to be huge, and it already is big, but it's going to get bigger. So dumping your money in crypto, dumping it into obscure crypto is gambling, but you can get paid doing it that way. I have holdings. I have long-term holdings in what I believe are four. I've got the Ethereum and Bitcoin, so I wouldn't say they're the innovative projects. They're just good stores of value, in my opinion. And will continue to increase in value. So they're good for growing capital. But in terms of XRP and Cardano, I think they're good projects, and I believe in the technology, and I think they've got good futures ahead of them. Now, there's a lot of good crypto coins out there which are great projects and have great real life use cases. So if you're going to put money in crypto long term, have a look at what you believe, which project you believe in has a strong and loyal community, and just do your own research is all I'm saying. Dump it in crypto, you're probably not getting too bad. Amazon's getting ready to split. That's fine. If Amazon gets ready to split, for every share that you currently have, you end up with 2 shares. Well, it's fine. No trades yet. There's nothing trading at the moment. We've got Murray Gold was up a couple of 100%. It's already sold off it's now 72%. TSO is the only other gapper above $3, above 15%, and that's on low volume. So right now, there are no trades for me right now. So the gap and go strategy that I use normally is probably out of the window for today. So I'm going to have to, execute against one of the other strategies once the bell rings instead. So if you buy 3,000 shares of CI today and it goes from $1 to 110 or 120. Yeah, so if it depends on what your plan of the trade is, Michael. So if you believe that you realistically have, if you've got a window above $1 and the next resistance level is 120, do you believe you've got a realistic expectation to move up to that next resistance level, which is 120? Then you take the trade with a view that you're going to get a 20-cent swing, and you're only risking 10 cents. So if it goes to 90 cents, then you cut it. If it goes to 89 cents, you're out. Okay, you cut it after that 10-cent risk. If it goes to 89 cents and then reverses and goes without you, that's fine. So what? You just say, okay, well, it faked me out. And the market does that from time to time. It did it to me yesterday. I went and bought I bought it like 350 on Agri, 350 or 450 or whatever it was, 350 on Agri for the break of the session high, the range high. And I bought at 351 and it went up to 354 and then pulled back. And I lost money on that trade because it faked me out. It does that occasionally. But if you stick to your risk, when that pulls back and it pulls back to in that case 340, for example, you cut the trade, you lose money, but you lose a small amount. And if you've got that 2-to-1 ratio in your trade plan, you only have to be right half the time to be profitable. You've got a 2-to-1 trade profit loss ratio. Only half of your trades that you take have to be winners. And then you'll be profitable. And then you can build on that. What are you talking about? You're the proud to have a lot of screens. What was this obsession with my screens, Micah? I'm using Benzinga scanners. So Benzinga Pro. There's a link in my link tree. Benzinga. And you can use the free ones, Finviz, Yahoo Finance, or anything like that. But I like Benzinga. It gives me everything I need in one place, rather than going to multiple different sites to get the news, to get the scanners, to look for volume, to get the signals, all of that. Benzinga's got it all in one spot. And not just that, they've got a good education program as well. They've got a lot of educational material on there. They've got a good YouTube channel. They have a preference for high cap stocks, but I trade, smaller cap stocks. But, Good morning, PMZV, CVCV, or whatever. Just going to scroll to the bottom. If I've missed your comment, I apologize. I'm just going to scroll back to the bottom. All right, you like screens. Okay. Check Santa's sack. There might be a screen in it for you at Christmas. The most common pattern that I see successfully happen more often than not is probably the flat top breakout. You get the flat bottom breakdown as well. If you're trading to the short side, then the flat bottom breakdown. But that flat top breakout, you kind of get the flat top. So you get a key area of resistance. Let's say it's a whole dollar level of $10, just for the sake of argument. You're trading a stock and it's up at $10. It taps $10, it gets to $9.99, pulls back down to kind of $9.80. It goes back up on the next candle and it taps $9.98, $9.99 again. Pulls back down to $9.85. Then it goes back up and taps that $10 range again, pulls back, and now it's $9.90. What you're getting there is an ascending wedge. So you're getting higher lows, but they're constantly tapping this resistance level. and what's forming is a flat top. So when it gets to a point, and what's happening there is what's called coiling under the resistance. So when it does break out, it breaks, typically will break out with big volume, and it'll make a big push to the upside. Sometimes you've got to take quick profits because it'll make a big push to the upside, and there's so many people that are caught in it, they want to take profits as well. So it will push to the upside, and you'll get a $20, $25, $30 move, 30 cent move. So it'll move from $10 up to kind of $10.50, $10.40, $10.50. You take quick profits, and then it'll pull back and then start moving up again. So the flat top breakout is a very common pattern that I look for. It's probably one of the most profitable for me. Bull flags are another one. Small bull flags are great, because if you're in a trade that's moving upwards, and a momentum trade that's moving upwards, when it starts to pull back, if you can recognize a bull flag pattern forming, you know not to sell your position, and you can actually add on the dip for that break of that flag formation as well. So there's a lot of good patterns to form. The cup and handle is a kind of a it's similar to the flat top, but it doesn't keep testing that resistance level. It pulls back, consolidates a little bit, moves up, pulls back but not as much, consolidates a little, and then moves up and then breaks out. That would be a typical cup and handle breakout. So there's a number of different patterns that I like to see. I would say the pattern that I see most often is probably the flat top breakout. I think NFTs are the most useful out of crypto from what I've seen. Please teach me. I don't know anything about NFTs. So from a simulator, your broker, if you're putting money into a broker, very often your broker will give you a paper trading account in addition to your live account. If you don't yet have a broker, then I would recommend, and you want to trade with Daytrading Pro, then you can sign up, and it's about $150 a month for the subscription, which includes the data fees. So you get the level 2, all view data fees. You get all the level 2 information. You get the direct market access, live speeds of information, so you can actually trade in real time on a paper account with Daytrading Pro. Sterling Trade is another good one that does offer those simulators as well. I've been in touch with Sterling, and what they've said is that they will, if I've got 50 students on my course, they will give me a package where I can subsidize that and offer that as part of the course. So that's what I will do. Once I've got 50 or more students, I'll go back to Sterling Trader and offer a simulator package as part of the course. So you subscribe in, and as long as you're on the course, you'll get the Sterling simulator free of charge, and I'll throw that in as part of the package. So there is. I've got to reach a certain level on the course before that's going to be worthwhile me doing that, though. So yeah, there's a number of different simulators that you can do out there. Whoever you broker with, I would say start off with whoever you broker with, use their simulator, and if they have a platform, the patterns, the charting, it's the same regardless of which broker you're with or which platform you're on. I do recommend using a direct route access software. If you can, though. I just think NFTs are a great way to launder money. I really do. I think that the majority, if not all, NFTs are a massive scam. Change my mind. I just don't get it. I know the whole metaverse and things I know a lot of people are making money on NFTs, but why? The question is why? It's art project. And the same thing, I'm an art skeptic. I like art, don't get me wrong. I do like art, but for somebody splodging paint on a bit of canvas, why would you pay $40-50 million for a bit of splodged paint on canvas? Because it's an original, when the replicas look identical to it, and you can buy them for $29.95 at Walmart. It's like, I don't get it. To me, that part of it's just a status thing. in the art world, that's just a status thing. If you've got more money than sense, then you go and buy art, an original artwork for stupid money for the small national growth product of a small third world country. You know, I don't get it. And now NFTs are taking over from that point of view. I thought NFTs were going to be a way to make sure that artists like music makers and things like that, I actually thought that it was going to be a way for them to ensure that they get paid, to get away from you know, copyright theft and things like that. And it's not. It absolutely isn't. I just NFTs, yeah, launder dirty money, tax write-offs, that kind of stuff. I just I don't get NFTs. I'm sure that there's someone somewhere along the line will come along and say, Tony, you're missing the point. This is the point, and this is why NFTs are the future, and this is why NFTs are. You should get into NFTs and start investing in NFTs. Until someone actually educates me on it, and to be honest, I've not done a lot of research on NFTs, so I'm talking out of my arse most of the time with this. But from what I can see, there's no fundamental value in NFTs. It's like I could have an NFT girl. This is the analogy that I've got at the moment. Is like 19-year-old girl emailed me a couple of days ago. This is not a true story, by the way, but this is just an analogy. 19-year-old girl emailed me a couple of days saying that she wants to be my NFT girlfriend. I said, well, what does that mean? He says, well, you can't interact with me in the real world. You can't touch me. But what you can do is tell people that I'm yours. And you can look at me on the internet. I'm like, well, that's NFTs in a nutshell. You know, that's an NFT girl. I mean, I'm sure there's lots of girls out there that are doing that. You know, so what's the point? Like, I mean, what's the point in having a girlfriend that you can't touch, you can't interact with in the real world? You'll never get to touch her for real. But you get to the chance to tell people that she's yours and show them pictures of her. Come on. You know, I'm no one's sugar daddy, certainly not some, you know, digital artist, not their sugar daddy either. So AMC is just taking a plunge at the open. The market's open, guys. So let's change the scanners to regular hours and let's see if we can get this stream actually working. Let's see if we can actually, we've got no trades today so far, guys. If you're wondering what we've been doing all day, we've just been gassing. We've just been gossiping and talking amongst ourselves, but we've no trades at all yet. Guys, just do me a favor. Let's give the screen a couple of taps. Let's see if now that the market's open, we can push it out, get the algorithm to push the stream out to a few more people. And I'm going to see what happens if any of the energy stocks come to life, or if any stocks at all come to life, because it's looking a very weak day at the moment. Okay, so Marigold is still looking weak. It's below the volume weighted average price, but that's still the top on the list at the moment. Give this a quick reload. But we're gapping up still. It's green on the day, but it's way below any kind of decent resistance levels, support levels. That's where's the entry on Marigold? I mean, I just can't see one. And now it's pulling back, so I'm just going to watch the 5 minutes candles there. No rows to show on the scanners yet. Tell you what, whilst I'm waiting, I'm just going to let the first 5 minute candle form. I'll go and get myself a drink. Just mind the stream for me. open the door for you if you want to go for a walk. You can go out in the garden if you want. I know you're not feeling well, but you can go and walk around the garden, get some fresh air. So, right, what have we got so far? $1 million JPEGs, exactly. Right. Still nothing. Lazy days. Let's have a look at lazy days. No, it's not the volume. PLXE. Oh, we might have one. What's the move here? Let's have a look at KLXE. So it's another energy stock. So it's down, but it's moving upwards. Q4 results. Yeah, Rivian, DocuSign, Diddy Global. There's a lot of red in the market. There's a lot of losers. Cheers, guys. A lot of losers in the market today. So this is important, guys. What I'm going to give you a little bit of information right now, and I need you to write this down, because this is probably the best gem of information when it comes to trading. Is that if the markets aren't setting up to reward you, don't buy anything. Don't take a trade out of boredom just because you feel like you must. If it's not setting up, don't trade it. Right now, that's the story of today. Today's P&L, 0, break even. We've not taken any trades yet. There is very, very little. What indicator do I use to trace volume? The volume indicator. So I've got the volume histogram at the bottom of every chart. So it's a very simple indicator you can put on any chart is the volume. I also track volume by price, which shows me where people are buying and transacting. But the volume indicator. Okay. Because it says on my chart. So right now, if I look at the daily, I can see what the volume bar is, 399,000 on KLXE. I can look at this on the 1 minute chart. I can see that the total trades, 2,000 trades, got 2,600 shares traded. So the volumes, it's horrible. It's horrible on this one. It's moved up, but there's no trade there for me. It moved up 15-16% in a 5 minute period. It's popped up out of the gates, but there's no volume. There would have been volume on. I can look at the volume bar by clicking on it. So 31,000 shares traded, and in that 1 minute candle, and we're looking at 52,000 shares traded in the following 1 minute candle. So 24,000, then 20, and then it's just the volume is just dying there. So you can see that. You can see that from the little histogram at the bottom of the chart. It tells you where the majority of the shares were traded. So it opened up. That was the biggest volume candle. So the biggest volume bar. So I'm watching the volume histogram at the bottom of the chart. I'm watching the candle action. What it even says on the chart, I've actually got it in type. It tells me how many shares have been traded, what the volume is, how many total trades have been taking place, what the high and low of that candle is, what the open and close is, and it tells me all of that. So I'll go back to Marigold. We've just got above the So Marigold's just done 7% in the last 5 million shares in the last 15 minutes. So 3 million shares in the last 10 minutes. So now I can look for an entry point. We're above the volume weighted average price. I can look for a potential pullback to an area of support and or resistance. Now I'm just going to zoom out on the 5 minute, see where we've got previously that potentially could be a level. So we're looking at the $5 level, so the whole dollar level there, and then after that we're looking at 5.65. So the half and whole dollar levels here I think are reasonable calls for support and or resistance levels. We're going trading in around the 4 to start off with, went down to 350. So yeah, the half and whole dollar levels are what I'm looking for here. So we need an entry point. So we can't take a position just because it's moving up, because it can reverse on us at any time. So we've got to wait for a pullback, even if it's a micro pullback. If you can spot the micro pullback, that's fine, but we don't want to risk getting caught in a reversal. Right now, there's not a lot else other than Marigold. So the range here for if I try to get in here, I've got 10 cents now to the whole dollar. So there's a potential resistance level at the whole dollar level. It might pull back from the whole dollar level. There we go. So we've got the red candle pulling back. It tapped the whole dollar level, so I couldn't take a trade because the resistance at the whole dollar level was too high. So I can take a position for the break of the whole dollar level, the break of $5. I can potentially take a position. And I think you'll probably see a bunch of traders trading this, looking for an entry spot. They're seeing this pullback now. We see that the 4.99 is the high of the previous candle. So $5 is the breakout now. So this level, I'll just take a 5,000 share position when it breaks $5. If it continues to pull back, we watch for the next candle to make a new high. So we've got that opening range high there, so $5. So now we're looking for the break of $5. I don't mind it consolidating, maybe even pull back 50 cents to the VWAP. We potentially could get in at the break of the previous candle's high, but there we go, all the way back to the VWAP, the 450. So knowing when not to get in is almost as important as knowing when to get in. So if you bought in early because you thought, okay, it's pulled back, I can get in there for the break of $5, you'd have got faked out and you would have been pulled back all the way to the $half-dollar level. Now the $half-dollar level is based on what I can see, there's a potential support area there, more psychological than anything. Based on yesterday's action, it was half and whole dollar levels were showing as being respected. I want to see this up now, and the next candle to make a new high. So the high of this candle is 92. So I could potentially take, there we go, take a position for the break of $5. It's tapped $5. I want to see it above $5. So we're meeting resistance there. There we go, we broke it. And I'll just take a little bit off straight away. Oh, quick profit. Still in for 2,500 shares. I'm looking for the run to 520. Potential add-on. Okay, so quarter dollar level there. So just going to add to my position for the break of 525. So we meet a little bit of resistance at the $quarter level, say psychological levels. There'll be people buying and selling at the $quarter. I can see on the volume by price level. See, there's quite a few that buying and selling at this level. So if we don't get the break, I will cut this one if it pulls back too far. I'm risking 5 cents from here. So break of $quarter level, 26, 27, above 30. There we go. I'll just take a little bit off there. So adding to the position, taking off, taking profits, adding to the position, taking profits, continually taking profits. Nobody ever goes broke by taking profits. Just remember that. But holding a position all the way up without taking any profits, you always risk the rush. You always risk the chance of a fast flush and losing all your gains. So always be continually taking profits. So our average buy-in now is 515. We've still got 5,000 shares in this trade. $600 in green plus the unrealized at the moment. I'm just gonna 550. It's the $half level. We're meeting resistance at every 25 cents at the moment. So we just broke the $half level at 75. I'll take some more profit and add back. In fact, I'm just going to take a bit of profit there, and then I'm going to add back at 5 for the break of 560. It's just okay. Don't mind it. I don't mind it pulling back a little bit. I don't want to pull back too much, but we've got a little bit of cushion on the ticker now, so it's pulled back to 530, so it's pulling back towards the $quarter level. If it breaks kind of 520, I'll get out. That's my new stop. We're for a little bit of profit, a little bit more profit. So 520 is my stop on this one, and then I'll look for a new entry after that. My add back is 560. If this breaks 560, I'm add more. There we go. Add another 2,500. So we're back in for. I want to see break the $3/4 level. 575. Run on to 590. Test $6. Okay. So 575, 590, $6. I'll just take a little bit off there. Whole dollar level always psychological, so it's not uncommon we'll get a little bit of a pullback. If we can break it, I will add for the break of $6. At the moment, it's 567. Our average buy price is 540, so we've got a cushion. When we add, we're scaling in and out all the time. I'm not taking big size. I had a good day yesterday, the big red day the day before, so I'm just taking it cool. Fridays tend to be quite, choppy anyway, so not taking big size. I don't want to be greedy. Okay, so the break of $6, just added back the break of $6. Our stop loss is 575 now because that's our break even. Okay, so we're making good money with this one now. Making good moves. We'll take a little bit more off. And we're already 3,000 up on the day. So this was not so much this was a gap and go, but it was one that it had been selling off. It had retraced most of its gains, but it was the only one that was on the watch list. So we're trading effectively the only one that's on the watch list is the one that we're trading right now. So that's the importance of setting up your scanners before market opens and looking for the potential trades. This is Marigold, MGLD, and I'm looking for the break of what's the current session high. So I'm looking for 637. That's an add at 637, or we're out at 575. Pulls back to 575. We cut the loss, and then 630. The next candle to make a new high is where we add. There we go. Late fill. So I got in at 650, but that's okay. The way this is going, we could see $7 yet. So this is doing well. Not what's the halt? 706 is the halt. So we potentially might get caught in a halt here. We've got cushion on this, so we got rejected at 7 there. We've got a bit of a push back at 7. I might buy this dip. I'm just going to buy this dip for a retest of 7. Let's see the retest of 7. Alt level is now 737, so a bit of resistance at 7, so I'm going to take some profits. If I don't break 7 this time, I'll take a little bit of profit off, reduce my exposure. If we break, I'll take it off there. So we're close to 5,000 in the green already. 640 is now our stop level. So we're constantly moving the stop level up. Every time we add to the position, we're actually taking some profits as well, which means we're going to break 7 this time. So there we go. It's tapping it again, trying again. So let's third time, try again. We break it on the 3rd attempt. Is that a fake out? So I'll get out at 650. I'm cutting my loss at. I'm cutting this trade at the $0.5 level if it pulls back that beyond that. Went down to 658. And it's a difficult market to trade when there's not a lot moving. But when you find that there's one stock that's moving and everybody's watching it, the movements become a lot more predictable. Just bear that in mind. Predictability is a big thing with the stocks. We're getting a lot of volume with this one right now. I'm getting a few 100,000 shares a minute, which I like to see. I want to see this retest $7. It faked us out at $7 beforehand. 650 will be a little bit more profit for us, so we'll just exit at 650 if it pulls back that far, or if it breaks 720, I'll add to the position. So we're out. Okay, so I'll show this one is Marigold. So it's one we were watching it earlier today. I'm going to zoom in so you can actually see the trades on the 1 minute easier. So what we did is we watched this as it came out of the blocks. We watched it, and we had a couple of rangy moves up and down, and then it made its move up. Okay, so then we got this what's known as a bull flag. So it moves up, and that's now the high of session. That's now the session high, and then it makes some pulls back down. So the next green flag pulls down to the VWAP. But potentially you've taken a position on the VWAP for a VWAP bounce. But I wanted to be sure. I wanted the volume, as you can see from these histogram blocks at the back in the background. The volume wasn't at this moment in time great. What I did is this high of this candle was my entry point. The next candle to make a new high. So that's when I entered. This little green triangle here is where I got in. And you can see the block at the back is the volume block. Everybody got in at the same point. So they all saw this break of the bull flag, and you can see it went off the chart. The volume came in and gave us that little spurt up. So I took a little bit of profit there, and it held, and then we added back the position there. Took a little bit more profit, and a little bit more profit there, then we added back to the position. So taking profit, adding to the position, taking profit, adding to the position, adding again. We took the profit and then we got out here. Okay, so all the time we're increasing where our stop is based on what our break even is. Once I took that first trade there and got some profits, my exit was break even. So this point where this little triangle is here, that was my exit point. As I added to my position there, my average buy-in was a little bit higher. So this would then have been my exit point, this the low of this candle. So all the way up, we're adjusting our mental stop, but we're adding to the position, taking profit and adding back. That's what we've been doing. What does that look like? So the P&L? Well, the P&L, as we can see on Marigold, is $5,000 on the day. So 4,700, which is not bad for 25 minutes trading, not even. So if we're looking at 15 minutes trading. So that's where we are currently. Now I'll go back to trading and see if there's anything else to trade. Well, let me see. You said Bitcoin's down bad, and I say no, it isn't. $1,000. It's moved $1,000. That's it. So it's 0.1%. It's down 0.2%. So Bitcoin's not down that much. It's still in the region of correction. The Hang Seng's down. Look at the Dow. That's 6%, 0.6% up. The S&P and the Nasdaq have pulled back a bit, but they're still green on the day. So yeah, I mean, is Marigold still a buy? How do I know the volume? So the volume candles I've got on the chart. I've actually got volume as one of the indicators on the chart. So if you got your chart, put volume in select indicators. And select volume, and it will put the little histogram at the bottom. Now you can have it in the background like I've got it, or you can have it in its separate little table on your charts. So that's where you see the volume. But in the top left corner of most charts, it actually tells you in number format what the technical indicators that you've got. So in this case, on the daily, I'm looking at the volume. We've already traded 28 million shares. 28.1 million shares on the daily with Marigold. Now it's consolidated, it's pulling back now. This is if I look at the 5 minutes, and this is what I do. I look at both. I trade on both the 1 minute and the 5 minute. But in regards to the 1 minute, we got out when it reached our stop level, so we made profit on that trade. It's a good trade. If I finish the day with that one, it's, as far as I'm concerned, it's close to the $5,000 average I want across the year. So I'm not too worried about that. But are we done? If I look at the 5 minute chart, this is the first red candle that we've got. So a consolidation candle on the 5 minute, and now it's turning green again. So I don't know if we are done or not yet. So the high on the 5 minute is 711. So if we get back over sevens and break out above 711, I think we could go again on Marigold. It's not financial advice. It's not a signal. I'm just telling you where the entry and exit points are, which is the actual definition of a signal. But no, I'm just telling you with regards to the patterns, we're making a bit of a U, a pullback, a bit of a consolidation. And if it goes up towards 711, if it breaks 7 and holds above 7 and gets 712 or above, then we're then looking at session highs. The next one bit after that, 750s. They've got a resistance at 750s, 725s. So the quarter, with this particular stock, the quarter, half, and whole dollar levels are proving quite important. So we're watching this now. We potentially could have looked for. We would have got faked out. We look for kind of a bull flag breakout there on the 1 minute, but we would have got faked out on the third candle because it went slightly higher. So the thing with a bull flag is it's a descending channel, and then it breaks out upwards. And if we'd done that, we wouldn't have really seen much, because the next candle here would have been this candle here, and that would have broke out 670. So we'd have got a 20-cent move, potentially get a 20-cent move at its maximum. So I'm really looking for the next break of $7. If it pulls back, we might see another something else forming, another pattern forming somewhere. But right now, Marigold is the only one that I can see with enough volume for the follow through. It's the only one that's gapping up with enough volume for the follow through. So whilst it still worries me that it's based on where it went up to, it went up to 890. Pre-market and sold off, so we've still got a way to go. I mean, if I look at we're nearly 200% up on the day, so we are extended. We're very extended on the day. But we've seen this last couple of weeks with 200, 250, 500, 750. That happens, and it happens on a weekly basis. We see at least one stock on a daily basis that moves, and moves substantially. So there's always something to trade. And whilst I was thinking I might have to change my strategy and go short today, I don't, because look, the gap and go strategy worked. It went out of the blocks. It was one of the gappers. It was trading below the VWAP, so I had to wait for it. For me, you could have got out of the blocks with it, but I had to wait for it to retake the VWAP and use that as and confirm that as a support before I started trading it again, and it's done that. So I'm happy enough with this trade and this stock today, and the strategy works. And just me being a shill and a sellout, the strategy that I used today, the gap and go strategy that I used today. I can teach you all of that. It's one of the focus strategies I concentrate on in the course. So, get your $150 out and take the class. And if you're wondering where to get the volume indicator, despite me actually telling you where to get the volume indicator, in the one-to-one session, I can actually go through piece by piece how to set up your desktop, how to set up your charts, what to look for. I can do that piecemeal, session one-to-one on a one-to-one session. That's not a problem at all. Just gonna do a little horizontal line here. So that's our level that we want. So what about Floki? Forget Floki, forget Doge, forget Shiba. If it's got a dog's face on the coin, I'm not interested unless it's Cho coin. The only coin with a dog's face on it that's worthwhile investing in for me is Cho coin. And if you're wondering why, it means it means you're not a very you don't come to the stream very often. But Cho coin is my coin of choice. I'm going to put all of my gains into Cho coin. In fact, that's going to be my NFT. It's going to be a Cho. Okay, so we're going to be volume coming in now. So are we going to so there's a little pattern forming here, which is often referred to as head and shoulders, where you get the arms, then a little head, and then another arm in mirror fashion to it. So that potentially could break out. But really, I want to see this back up towards above $7, retesting the high of 712, 711. Got our first full red candle on the 5 minutes. So we've got the consolidation there we need for a good run. It wouldn't surprise me if this goes one way or the other. I think that, getting up to pre-market highs is a possibility with that initial movement that we got out of the gates. So the pre-market high is 889. 890. So we've got 3 significant resistance levels. I'll just see if there's any more on the 5 minute that I can see. No. We've got 750 and then pre-market high of 890. So if we can get above this high of session, if we can break the $half level at 750, it's this virtually no real resistance other than the $half and $half up to $9. So just worth keeping an eye on. I'm just keeping an eye on the scanners to see if there's anything else pops up. But right now we are half an hour into the market, 40 minutes. 35 minutes into the market open, and the only one that's really making any moves is Marigold. And they did bring up the catalyst here was after hours yesterday. They did announce some new products. It's a $6 million share float. So Original Sprout announces new product offerings, worry-free and bundle of joy at Natural Products Expo West. So that's really the catalyst from yesterday evening that's making it move today. So I don't mind this coiling, this consolidation. What we're doing is we're finding that we're getting a nice little bit of support here at 630, 640. I'll just put a little line there at 635. It's in and around that 630 level. We're getting that support. It's kind of a descending wedge. So want to see that little rail line. This is better than taking a boredom trade, if I'm being honest. Putting a little lines in and making your charts look messy. So, right, we've just rejected and pulled all the way back to the volume weighted average price. So that kind of just ruins that little descending wedge. So going back to what I was saying before about patterns that form, a typically accurate pattern is the flat top breakout. The reverse of that is the flat bottom breakdown. So on the 1 minute, what I'll do, okay, I'll answer that question about gambling in a second, but I just want to show you this this pattern here. The flat top breakout is when it comes back and we're getting higher lows, and it comes back and retests the line of resistance again and again and again until it breaks upwards. The reverse of that is exactly the same thing but upside down. So we're getting lower and lower highs, which is marked by this descending line here, but it comes back and it taps this bottom line here. So it's a bearish indicator as opposed to a bullish one. And it taps this level. So what we've got here is a flat bottom, and then we've got a flat bottom breakdown. As we end up running out of steam with regards to the lower highs, we end up breaking down with volume. So that's a typical textbook flat bottom breakdown. Okay. Now, if you were shorting that, you'd be looking at that and saying, "Oh, it's going to break any moment." And that's what you're looking for. You're looking for patterns in the markets. You're looking for chart patterns in the markets. Now, what was the question I wanted to answer there? Anyone doesn't know that all of this is a glorified gambling life? Anyone that doesn't know that all of this is glorified gambling, life is risk. Okay, so it's not glorified gambling. There's two differences, and you're absolutely right. I'm not disagreeing with you in terms of that there's risk here, and life is risk, and you've got to take risks to realize your rewards. But what I would say to that is that gambling, the definition of gambling is you're coming in, you're concentrating on what the potential outcome winnings could be without actually taking into account what you lose. You're putting all of your money in and you're staking your money with the potential to risk everything for a win. That's gambling. You're taking a long shot, if you will, when the odds are not in your favor. The whole point of pattern trading is that you want to turn the odds in your favor. So you do that with a number of different things. Firstly, stock selection. So we've selected the stock pre-market that was gapping up. It was exhibiting a trend. It had the volume. It was just trending below the median line, which is the volume weighted average price. So we didn't take any trades pre-market with it. And we're saying that it has to break over that and start exhibiting an upwards trend again. Otherwise, it's not a trade for us in the long bias. In addition to that, is managing the risk versus reward. So having a trade plan that's right for you. On top of that, the third part is the pattern breakouts. Looking for a pattern, looking for the areas where you're going to get the breakouts, the high of session, high of day, ranges, etc., etc. So by doing that, you're constantly mitigating your risk and putting the odds in your favor rather than trying to get a winner when the odds are against your favor. And that's the pure definition of gambling, is trying to get a winner against the odds. So if you go to a roulette wheel, any table game in a casino, the odds are against you. The house always wins because the odds are against you. Whereas if we know the patterns and we know the breakouts, we start saying, okay, we put that together with our risk versus reward, then the odds are now in our favor. And that's the difference between being a profitable trader and going in with a gambling mindset. But you're right, it's risky. Trading in the markets is extremely risky. And, 80%, over 80% of the people, 85% of the people, according to Stanford, that get into the markets lose money. If you're trading Forex and Forex pairs, then if you're trading Forex pairs, then that percentage goes up to in excess of 95% of people lose money trading Forex. There's a very small percentage of people trading Forex that are actually profitable. When do you know you should open a position? Because I'm watching for the patterns to break out. So, for example, that first position that I opened on Marigold, I watched first of all. I watched for the pullback. It started to move out of the gates in an upwards fashion. The first milestone was I needed to retake the volume-weighted average price. Once it had done that, I was waiting for an entry point. So I was waiting for a pullback that I could get in. It pulled all the way back to the volume-weighted average point. I could have taken a position there for what's known as a VWAP bounce. I saw that a volume came in at that stage. So people were taking a position for the VWAP bounce, which is another pattern strategy. But I didn't. I waited for the next candle to make a new high. So we had two red candles on the 1 minute. That pullback was consolidation. And I waited for the next candle to form a new high. So a green candle that beats the high of the previous red candle. And that was my entry point. So I got entry there, and the risk that I was having was the low of the previous red candle. So on this particular setup, I was getting in at 492. So I was looking at 493. What did I actually get filled at? I got filled at 497. So I got in the breakout. The volume actually came in because I'm not the only trader that's looking for that. But I was risking to the VWAP would have been my risk, but the low of the candle was 448. So I was risking effectively 50 cents on the share. I would have actually got out if it broke the volume-weighted average, but let's just say the low of the previous candle, if I was taking the high of the previous candle for the entry, I look at the low of the previous candle for the exit if it goes against me. And then I take a quick profit take some of my position off once I'm actually in profit, and I hold the rest. So as it rises up, I can then add to the position. I've got a cushion, and what that's doing is it's giving me a lower average buy price, so that if there are any moves to the contrary, if there are any quick reversals, I can get out without losing any money. And at that stage, I've got money already, and I've already locked in profit. So as we start moving up, every time we break a new high, I'm able to either take some money off, or I'm able to add to my position. And that's what I was doing all the way up from 497s when I got in to my highest trade. My highest transaction was 666. So there's a $1.70 move that I captured on that move. So you look for the pattern breakouts. That was the long answer. The quick answer to your question, and the question is when do you know you should open a position? Is you look for the pattern breakouts. You look for the entry signals, and I cover all that in my course. Entry and exit signals is all in my course. I've been off the stream for a while. How's the trading going today, mate? Well, we're 4,700 in the green, so we're doing well. So it's broken down. The one ticker that's been trading well is now pulled back. It's sold off. It's below the volume weighted average price again, the way it was pre-market. So I'm just going to draw a ray line from the pre-market high to session high, because that might be significant. So yeah, we've only been one trading, but why is Tesla tanking? That's a good question. Well, let's pull up my trading view and have a look. ESLA. It is selling off big time. So it's down at 816s. So let me have a look at what the news is on Tesla. Pull this up and share. So Tesla, it was higher by 1.83% in pre-market, and then it's just sold off. So Tesla, Elon Musk floats theory Star Trek's transporter could split you into two people. Think before you say beam me up, Scotty. So the thing is about Elon Musk. I love Elon Musk, but he is the dope king. You can tell he spends the majority of his life stoned. It's clear, you know. I mean, some of the stuff he tweets and some of it's so outlandish and out of this world. It's no wonder he wants to go to space, because he is a space cadet. He truly is the king of space cadets. Elon Musk. I mean, love the guy for what he does, but the guy is completely outlandish with what he, you know. It makes great reading when you follow him on Twitter. If you don't follow him on Twitter, give him a follow, because some of his tweets are absolutely hilarious. But there you go. How to invest like Cathie Wood? Well, Cathie Wood's kicking herself at the minute because she's lost a lot of money in ARK Invest. Rivian, why this Tesla rival could see high street interest. So Neo, Rivian, Tesla, they're all down. I think there's just a general EV sell-off at the moment for some reason. The whole sector seems to be down. Could be worth buying the dip. I don't know if you're long-term invested on Tesla, because I like Tesla as a company. I like the cars. I like that EV space as well. And if you're long-term invested on Tesla, it could be worth buying the dip. They were trading up until the bell opened, and then it just sold off, and it's done nothing but sell off. So look for a reversal signal. Get your technical indicators out and look for a reversal on Tesla, because I could see potentially this doing a red to green at some stage today. If you put Bollinger Bands on Tesla, where are we? Indicators. Let's just Bollinger. So we're still in the Bollinger range. So the blue, if you're on YouTube, you'll see this. This is the Bollinger Bands. So we're still in the Bollinger range. What I'd like to see here with Tesla is if we get really extended, if I put the RSI on here as well. Okay. So right now we're seeing that it's really extended. So it's in the region of oversold. But it's still within the Bollinger Bands. So what I'd like to see here with Tesla is if we start trading outside the Bollinger Bands and we get a little doji candle at some stage whilst it's down here in the oversold section, then that potentially could be an indicator of a reversal, and then a good entry point to take for a bottom bounce. I can't see whenever I've tried to bounce to trade Tesla. To the downside, I've lost money. So I potentially look for these two indicators on the RSI coming together for a crossover, and see where we are. If we're getting a little doji candle forming at the same time, that could be a good entry point for a quick swing and a move up. And Tesla tends to be the leader of the pack when it comes to the EV space. So Rivian, Neo, and any of those things. Let's have a quick look at Neo, because it's probably doing the same thing. So yeah, so Neo sold off as well. Rivian. So Rivian sold off, but it went up first. But so yeah, I mean, get rid of the Bollinger Bands and RSI now. So yeah. Tesla, I'm not worried about Tesla selling off. I wouldn't be worried too much about it. It will bounce back. Would I recommend Forex? And what type of trading would you recommend someone to get into? Not Forex. So Forex is 95% of people that get into Forex lose money. It's one of those areas that most people that do trade Forex are heavily reliant on technical indicators. So there are a few strategies that use technical indicators, and they look for, you know, moving average crossovers as entry points and exit points. The problem with moving average crossovers is moving averages in general. In fact, most technical indicators is they are lagging indicators. So if you're not seeing the patterns on the candlestick charts, following the technical indicators blindly, you at best you're going to get a 50% win rate. So just be careful if you're thinking of trading Forex. Most people lose. If you're looking at day trading, the volume and the volatility is in equities, in the stock market, in the US stock market. So that's what I trade. I'm not saying you should do it, but you know, it's what I do. It's what I do. Okay. Do I stake crypto, and if so, what's the best app to use? I don't stake crypto. I've been looking. It's funny you should say that, because I've just been looking into that over the last while, and it's something that I'm looking at potentially doing this next month or so. So I'll come back to you on that when I decide which app I'm going to be using for that, and which instruments I'm going to be staking. I'll let you know. And YouTube. So after going through the course, will it be available to me after 1 month has passed? No, it's a simple answer. So if you want access to the course for longer than a month, you subscribe to it longer than a month. It's that simple. So it's $150. Access the course. If you want to continue with it after you've accessed it, then either extend for a month or take a 3-month package. It's cheaper to take a 3-month package than it is just to buy 3 consecutive months, but it's up to you. It's up to you. If you enroll in your course, you'll have access to all the chapters from day one. I've not locked it. I have the option to drip feed the course, so that you have to complete them in sequence. You don't have to complete them in sequence. I would advise that you do complete them in sequence, and if you sign up to the course, once you've signed up, you'll get a welcome screen that has a link to my calendar, and gives you the option to book a 90-minute session with me one-to-one, and I can go over areas that you are. What I would say is, don't book the session right away. Go through a couple of the modules first, start trying to digest that, then book the session, because that way you'll get more out of it. I'll be able to explain any areas of the course that you find a little bit difficult to understand. There shouldn't be. I've tried to make it in lay terms, but any of the areas of the course that you find difficult, just drop them down and I can go over them on a one-to-one basis, no problem. I don't trade the UK market. So this is a good question. Why do I not trade the UK markets? I don't trade the UK markets because of the lack of volume. So the two things that are the best friends of your intraday pattern day trader is volatility and volume. Now, occasionally you can get a stock in the UK market, in the FTSE, that has good intraday volatility, but it doesn't have the volume. And what I mean by that is that of all the world's retail traders, day traders, the majority of them are trading the US exchanges, the US markets, and they're not really getting involved in the majority of the other markets are awash with institutional investors. The US markets is where you go for the volume. You know, you can swing trade and you can, you know, invest long term on the FTSE or the DAC or the, you know, Hang Seng or whatever your flavor is, but you're not going to get the same level of volume as you do on the North American exchanges. And why am I looking for volume? Because I'm looking for these patterns to form, and I'm looking for these patterns to break out. So if we get these patterns forming, and when we look for the pattern breakout, all of these other day traders are trading either the same or similar strategies to myself, are going to jump in at the same place. So it gives me a more assured way and confirmation when I see the volumes coming in, the confirmation, and we get a bigger swing, a more volatile upwards movement, or almost parabolic movement to the upside for me to take profits. I don't get that on the I don't get that follow through on the London markets. That's why I don't trade the London market. Okay. This is a good comment by David. He says Tesla doesn't make any sense to me. They sell cars that nobody buys, yet have a market cap equal to the top 6 car manufacturers combined. Yeah, that's you know why I've tried shorting them, and I've lost my shirt on options, buying puts on Tesla. It makes no sense to the analysts either. It's one of those anomalies in the market that the hype outweighs reality. And for Tesla, you know, people just love the concept of buying Tesla cars. It's become a bit of a status symbol. And the stock, Elon, his social media presence is big as well. So he's a very charismatic guy. So people warm to the guy, and they, you know, relate to him. So a lot of it, they're buying into Elon as much as they're buying into Tesla. There are so many people buying shares of Tesla that don't even care about the fundamentals of the company. And this is why, from a fundamental analysis point of view, most analysts don't have Tesla as a buy. They say it's massively overpriced. And, you know, it belies logic. But I've learned over the last while not to bet against Tesla because they keep surprising me. And I do like the cars, I do like the company, and I do like Elon. But based purely on fundamentals, I can't justify. If I look into the company, I couldn't justify Tesla's share price, and very few analysts can. Even Elon Musk himself can't justify that share price. It does fundamentally seem to be massively overpriced, but it is what it is, you know. So for those on YouTube, if you look at the 1 minute chart here, and I've got the cursor here, so I was just I drew this trend line from the previous high of session down to the previous highs that it's going down, and I just left it there. And what we got is we got a move up once it came and retook the volume weighted average price, and we see this volume bar here. As it broke that trend line, volume came in. Now, it got rejected and sold pretty much straight away at this resistance level. That was support. It was acting as this flat bottom. It's now acting as resistance. So it sold off and it came back up. And as it broke this trend line again, look what happened. The volume came in again. That's the power of technical analysis. Now we're testing this resistance line again. So if we break, we'll probably see, if we break here, we'll probably see volume come in here. For the break. So we're seeing watch how quickly the volume's flowing in for the break of this this resistance. So that's the power of technical analysis. And you see that time and time again. You're able to, and that's the advantage we have over the high frequency trading machines, is that we spot the patterns, we spot the geometric patterns that they can't spot. But the machines, the computers don't spot the geometric patterns. We draw something like that. We draw the descending wedge shape that we had here when it broke down. So the people would have taken profits there that were shorting this if it is available to short for the break of this flat bottom breakdown pattern here. When it comes back up, they've already drawn these lower highs, connecting these lower highs They've already drawn this trend line the same as I have. So they're actually coming in for the break of this trend line. And we've seen there that the volume as it comes. Now we're getting a quick rejection at this resistance level. So we drew this resistance level as the support level for that flat bottom after we reached the session highs. And it was a support, and it kept on tapping. It confirmed support, what, 1, 2, 3, 4, 5, 6 times it confirmed this level of support before it finally broke it on the 7th time. We've just gone up now, and it's finding a resistance, confirmed resistance, 1, 2, 3, 4 times before it's rejected again. Now, that's the power of technical resistance, technical analysis. So the whole point there is learn how to read charts, learn how to do technical analysis, and you get your entry points, you get your exit triggers, and you get your entry signals, and that's how you can make profits. So a lot of people would have got the profits for this breakout when the volume came in. That's why the volume came in, because everybody saw that this trend line was about to be broken. So the volume came in. Then there's people here that they got in for this break here, but it was a fake out. The volume didn't come in, so you knew straight away you've got an exit there, whatever the low of this candle is. That's your risk. You're looking for the breakout, but your exit is the low of this candle. So 630 is the level that we're really looking at, and the low of this candle is 615. So you got a 15-cent risk on the trading that breakout. When it fakes you out, you're out here. It breaks down here, so you're out. It stops you out. So you're only losing 15 cents on the share. So that's the idea of calculating your risk versus your reward, but also you know full well if it breaks out, you're looking to move up to kind of 660. You're risking 15 cents, you want to be making 30. So not all the patterns work in your favor. Sometimes they do fake you out, like I say. And look at this trend line that was acting as resistance all the way down, tapped it here, it's tapped it here, it's tapped it here, and down here again. Then starts its support. It's tapped it here, it's tapped it here, it's bounced here. So just drawing those on you, I would encourage you as beginner traders, draw these lines, resistance, your trend lines, your lines of areas of support and resistance, draw them on your charts, and it gives you good signals to actually get in. It's really, really, really informative. So are we going to break the 630 resistance here, or is it just going to it factors a bit again? And it's not to the penny. Just remember that some people they get the slippage in the execution. So it's not to the penny. It's the area. So around, give or take a few cents, either above or below that 630 level, as we'll see there, we went and tried it. The volume came in for the attempt. It got rejected. Now the volume's really coming in. We've broke that 630, 640 level, and the volume is really coming in. So this is an important lesson that you should be looking into in technical analysis. That we just broke this level, we drew this level as a support level, it acted as resistance, and once we broke this resistance, the volume came in because everybody saw this is a key resistance level. We're buying in there, and we want to ride this upwards for a profit. So now we're getting a little bit of resistance at the $half level at 650. So it's really fascinating, and it never ceases to amuse me how well respected the price action is around the technical analysis. So with that said, you've just had a free technical analysis lesson, and I hope that was good for you. And I will just close the stream now. What I'll do is I'll give you the final update on the profit and loss. We've not taken any trades since we closed. I'm going to have an early bath for the weekend. So 4,747 is where we're finishing. And I'm going to start closing the scanners down and close the stream down. So thanks for joining me. We'll be back at it on Monday. Enjoy your weekend. I will do a summary video on YouTube a little bit later for the entire day, and I'll probably go over the trade in a bit more detail. But this technical analysis stuff, learn technical analysis, and I teach it in the and I do teach technical analysis in my course, and I can go into more detail with that. So up until today, we were 44,005. We've got another 47, so we are 49,000 49,000 up on the month. On the week, we started the week on Monday, so on the week we are 37 plus four and a half, so we're 41,000 up on the week. Been a good week this week. Been a very good week. So I've got Scottish ancestors. My dad's Scottish, so I'm not Scottish, but my father is. And I did play rugby for Scotland, so go figure. So I'll close the stream down now. Enjoy your weekend, guys. Check the YouTube channel for the summary later, and if you've got time at the weekend, check out the course. I will pull it back up here just for everybody's benefit. So here's the course. As I say, day trading with me, day trading with Tony. I'll need to flip the camera around. This is the course. If you go into my profile on here, this is me. That's my face. Click on the link tree. It brings you to the link tree. The very first link is my course. That brings you to Day Trade with Tony. You can go through this piece here. Lets you know what I'm actually doing. There's 12 chapters. The concepts of what it is, gives you the ability to, the tools to be profitable in the markets. Here's the syllabus once again. First introduction, then we cover risk management in detail, and that's incredibly important. Stock selection, setting up charts and understanding charts and areas of support and resistance, that kind of thing. Intraday chart patterns, intraday strategies, which is what you're all asking for, is the actual strategies themselves. We start talking about stock selection. So again, stock scanning. I do a tutorial on Benzinga, how to set up scanners. So everything you need to know. If you subscribe to Benzinga, then this is a step-by-step guide. You can use the same principles with any other scanner as well. Then about trade management, your psychological game, how you're getting, what you're doing with regards to, winning and losing positions. Level 2 and hotkeys, a bit more technical. Then we start talking about trading as a business. Here, I give you a full trading plan, a 3-month business plan, and trading goals, set goals. I go into a little bit more about the strategies. I even give you cheat sheets about the strategies as well. Then a little bit on advanced technical indicators that I use for some of my other strategies, like the reversal strategies, and then an introduction to options trading. You can see here that and this is all available. This is the lecture length that I recorded, and then there's an exam on most of these modules. So if you get the exams wrong, if you don't pass the exam, go back, retake it, watch the lecture again, retake it, get all of this into your head before you start trading. You don't have to worry about the options trading unless you're planning on trading options. Options is more of a swing trading strategy than it is intraday trading strategy. So you just get more leverage by trading options if you're a swing trader. So yeah, take a look at this. As I say, on the link tree, it's the first one. With regards to the rest of the link tree, if you're wondering, I've got, this is a course, 7 books for affiliate marketing. I took it. This helped me set up my affiliate marketing business, and following the principles here for affiliate marketing, I get a lot of passive income now through that. Benzinga, have a look at this. 14 days free. You don't need a credit card or anything like that. Just give them your email address and verify it via either a phone or SMS or whatever, and you can start looking at the stocks. This is Benzinga. If you're wondering what I'm talking about there, these scanners, news alerts, etc. You play around with that, and that's Benzinga. If you want to jump straight in the markets but don't have the capital, you've got a couple hundred bucks and you think you're going to be able to do well, TradeNet Academy. here you can either do the get a fully funded account with them and they'll do a profit share if you can prove that you're profitable, or they have a challenge. It's like $200 to do the challenge, and they'll give you a paper account, $10,000 to trade with. They'll set you a profit and loss goals. So if you lose a maximum drawdown, if you lose the challenge. And then if you hit the profit goal, they will give you $80,000 to play within the markets. So that's good. And they've also got a crypto version of that as well. So I put that up there because a lot of people that come into my streams are crypto. And then TraderView. So I use TraderView for my journaling. This is TraderView. It tells you all the details. You can get the overview. I can go back to 2021. This year. This is my profitability in January, February, March. I've actually had 2 red days, but the small red day I had at the beginning of the month was green on the profit and loss of the trade, but after charges and things, it took me slightly red. So that's why that's not a red day. But you get all your detailed stats. So if I look at this month, for example, filter by this month, and I look at the detailed stats, I can actually look at what my profit loss risk is. I'm 5 to 3 at the moment, as opposed to 2 to 1. I'm not far off that 2 to 1 that I need to be. My accuracy is just over 62%, so 62.5%. That's good. That's a good accuracy. So you can see right now, before today, this is what gain is on the month. So we're doing well. This is TraderView. There's a free option, there's a free plan that you can use for TraderView. If you're going to be trading, I recommend it. And then we've got Dash Trader. Everybody that's looking at what platform I'm using, Dash Trader. This is a link to there. They have you can get simulator access. If I just go through into this one now, so you can have a look. It is a subscription. If you go into the products section, Dash Trader Pro here, subscription. So you go into click on the subscribe button to that, and they give you a real-time simulator. You can pick your package, paper trade package. And the package I recommend is this one for $150. Why this one? Is because you're getting the total view, which is the level 2, and you need that. So if it's level 2, you can get away with the 100 one for charting and just ignoring the level 2. So if you don't want to subscribe into $150 and you've only got $100 a month to subscribe to a simulator, then take this without the level 2, and that's fine. That's not too bad. But to get full use of it and practice, you do get more if you've got view of the level 2. So that's a simulator with Dash Trader. Okay. And what else? So Interactive Brokers, there is a broker I recommend. You can sign up with them, and you can earn up to $1,000 of Interactive Broker stock with them if you become an active trader with them. So that's my link tree for you, and you find that link tree by going into my profile and clicking the link. Okay, so that's me, and I think I'm done for the day. So here's my face again, and with that note, I will end the stream. Okay, have a great weekend, guys. And the same goes to you guys on YouTube. It's 30 days from buying it, Jack Sparrow. So you get 30 days. It's priced on 30 days access. So if you bought it in February, you get 2 days in March as well. So it's 30 days access. I've got 3 packages there. I've got 30 days, I've got 90 days, or I've got a 1 year. It's up to you what you want to take. And the bigger the package, the more consultancy you get. So the more one-to-ones you get. With the 30-day package, you get 90 minutes one-to-one mentorship. Which is why I say if you take that, and just make a note of the link, or book it out a little bit book it out in terms of a couple of weeks instead of just right away. You can always move it, you can always reschedule it. That's not a problem. But you get 90 minutes with the 30 days. You get 3 sessions with the 90 days, and you get weekly sessions with the annual. So it's up to you. You know, I'm not saying buy it or whatever. Yes, you get 90 minutes with the 1 month package. So, which is why I say if you bought it today, for example, and started it over the weekend, then when you start over the weekend, what I would suggest is that you book the session for maybe Wednesday or Thursday next week, or next weekend even, or whatever. So support afterwards, yeah, absolutely. But if I get enough people doing it, I'll open a chat room or a trader room for students as well. And anybody that buys it, I'll probably just create a WhatsApp group. Well, Jack, right now I'm giving away so much free information on the live streams. People are asking questions. I'm being transparent about it. So if you're stuck, if you need support afterwards, there's no problem. You won't be getting that one-to-one mentorship. But you ping me an email, I'll answer an email. There's no problem. You know, time is money and all that kind of stuff. So by all means, utilize the time that you have in terms of mentorship and the one-to-one. But what I probably will do is break out a consultancy package as well with that, so that if you need more afterwards, if you want to do the 90 minutes and you still want one-to-one support after that, I'll just probably break out 60-minute sessions and charge $100 a time or something like that, on a consultancy basis, so you can actually get support on an hourly basis, and I'll charge by the hour instead. You know, I can't say fairer than that. So I'll work on that over the weekend and put something up on the page. It's probably the easiest thing for me to do. Okay. In the meantime, have a good weekend, buddy. Enjoy your time off if you're not working, and if you are working, you know, try and enjoy your weekend anyway. And I'll see you all back at it 2 hours before market opens on Monday. Thanks a lot, guys.